equitably to smartphone chips, to high-performance chips, to GPUs. Now, with smartphone demand being down, PC demand being down, all that capacity, the leading node capacity, is being allocated to the GPUs that NVIDIA is making, and there is just insatiable demand. Even with the pricing they have, the demand far outpaces the supply, and that's why you're seeing this kind of margin expansion.
Right.
Well, let's stick with demand here. I mean, NVIDIA's GPUs are being used to build large language models, do inferencing, all of that good stuff. But is it enough? Is demand enough to justify a $400 billion increase in market cap over the past 3 months alone? Andy.
I mean, look at the data center revenue. This is a $50 billion run rate business now. 7 years back, they didn't have this business. So you can compute the CAGR. $50 billion, and that too at a much higher margin than their gaming chip margin. So clearly you're seeing the best top line growth and margin expansion story in tech right now. And the proof is in the numbers. I mean, it's not as if it's going away. Last night they said they have visibility to 2024. Although some people were disappointed that they didn't call out, where that demand is coming from, but the company is saying they have visibility.
Yeah.
I wonder why they buy back $25 billion worth of shares, especially at these levels. I mean, how do you value the stock? Clearly, it's not on trailing EPS, but even if you look forward to 2025 earnings expectations, they're still trading at, what, 40, 45 times that. Aren't they a little bit rich?
Which is lower than Amazon's. So I guess if you compare it to, some of the other tech companies, they're still trading at a somewhat of a lower PE. And again, you have to look at the multiples relative to growth. There is no other company in that magnificent seven that is growing top line at over 50, 60%. So relative to growth, the multiples don't look that high. Now, the question is, what happens after 4 quarters? They have 2 more quarters of easy comps. After that, the comps get much tougher. I'm sure they're not going to be able to grow at over 50%. And we know with semis, there is that cyclical element that after a period of growth like this, there will be a digestion period. And it's guaranteed you are going to see digestion because most of their buyers are still the cloud companies, which are going to launch their own AI services. And they could be competitors in the long term, although there are no signs of it right now.
Mandeep, can you take a step back and sort of right-size the impact of AI on the broader market? We just got done talking to an economist who was telling us, AI may not impact the economy for the next year. It's a 30-year time horizon kind of impact. But it seems to me like we're seeing some real-time growth here. This is a lot more than just hype, which is how it was characterized just 6 months ago. So give us a sense of the size and scope of this. Can we see some real-time economic impacts really follow through as a result of what you're seeing?
I think there's a couple of noticeable changes in terms of how software is used, the interface. The Copilot aspect is pretty much being rolled out to everything we use in our day-to-day lives, whether it's browsing apps or, using software. And I have to say, when you see these kind of pricing from, chip companies, semi companies, these are costs for the software guys or for businesses. So at the end of the day, yes, NVIDIA's margins are growing through the roof, but this is somebody's cost. And those companies will have to bear some margin headwind right now because they have to buy these chips at the higher prices. So clearly, I think the tailwinds that you are seeing when it comes to the chip demand and the margin expansion, you're not going to see that for software companies or internet companies that are buying this. And they have to figure out how to monetize or pass it on to their consumers.
Mandeep, I wonder if you could square NVIDIA growth with the national security concerns that are obviously facing chip manufacturers. I mean, I think Saudi Arabia is a large investor in NVIDIA. I know 2 of its larger clients are Chinese, Tencent, Baidu. Talk to us a little bit about that.
Well, so I think there could be a pull forward element here because of the export restrictions, and everyone is trying to get their hands on these chips right now. Well, guess what? If the U.S. government bans all exports to China, NVIDIA has a 20% revenue exposure, and they will take a hit. But clearly, they have found a way to skirt around it through the lower performing chips. And right now, again, there is that demand aspect where everyone wants to just get hold of these chips.
I'm just looking at, on the 50 to 60% growth in the Magnificent Seven, just looking at Tesla, right? They have, in the past few years, 2020 revenue, $31.5 billion, 2021, $53.8 billion, 2022, $81.5 billion. So they're growing at extremely...
Look at their gross margin. They are a 20% gross margin versus NVIDIA, which is a 70% gross margin.
No, it's a great point, although 20% of the automotive industry is still like a dream come true. In terms of growth for the rest of the market, do you look at the secondary effects of AI or the companies that aren't pure plays? I mean, what else out there could be an NVIDIA if they focus harder, right? Intel is now entering the fray with GPUs that are capable of powering large language models. AMD is already out there too, but neither one of them has the supply and to fulfill what the demand is like.
Yeah, and I'm honestly worried about Intel because of the NVIDIA print. At the end of the day, semiconductor market, long-term growth is still going to be, high single digit to low teens. If NVIDIA is growing at 50% clip and it has a CAGR for the next 3-4 years, someone is losing share. And data center right now, if you look at that market, Intel is the incumbent with their CPUs. They don't have the GPUs. They could catch up. But I think Intel and AMD being on that x86 system, whereas NVIDIA's ecosystem is all ARM-based, TSMC, that just goes to show that there is a risk they will continue to lose share. And I think there is a share owning aspect to what NVIDIA is doing here.
Just to be clear, because my mom is watching this morning, right? Mom, that's compound annual growth rate. That's what CAGR is. We gotta explain this jargon. Mandeep, great having you in the studio. Thanks so much for joining us. Mandeep Singh, their Bloomberg Intelligence tech analyst who covers companies like NVIDIA, and that is expected to drive markets today. How key has NVIDIA been to the rally that we've seen in the broader S&P this year?
It's been a huge part of it. I mean, obviously in the spring months, the peak sort of concerns around concentration risk occurred, and a lot of that was in reflection of NVIDIA's initial announcement that they were going to just crush earnings expectations, which refloated, optimism in that space. But we have seen a bit of broadening over the summer, but this is still the bigger trend for 2023 is the Magnificent Seven driving everything, NVIDIA at the forefront of that.
Yeah, can't be, I think, overstated, and we'll see it play out in this morning's trade. Coming up next, Kara Murphy of Kestra Investment Management joins us. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Keeping the faith in billionaire Warren Buffett. The legendary investor turns 93 this August. His signature must-read letters to shareholders have been getting shorter and shorter. This year's letter contained few fresh ideas. But most investors in a Bloomberg survey say Buffett's steady Eddie approach of buying cheap, safe, high-quality companies will beat the market. They expect returns in his investment company, Berkshire Hathaway, to outperform the S&P 500 over the next 5 years, adding to an incredible run in which Berkshire shares have returned more than 3 million% in the almost 6 decades Buffett has led the firm. Investors are also willing to pay up for Berkshire, which owns everything from the railroad BNSF and car insurer Geico to See's Candies and Coca-Cola. About 1/5 quantify the Buffett premium at more than 10% of Berkshire's stock price. More than a quarter say it's somewhere between 5 to 10%. There is one problem for Berkshire Hathaway, its size. Thanks to a bunch of cash-generating insurance companies, Berkshire has at least $130 billion in cash that it can put to work. But it needs big acquisitions to move the needle. Buffett calls it hunting for elephants. And we know Buffett hates overpaying. So that means sitting tight, patiently waiting for the right moment to pounce on the right company, which might be a drag on performance for now, but as Buffett fans know, usually works out in the long run.
Business Week Radio. Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. From our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Now, unfortunately, we've seen this deterioration in breadth, and it's sort of across the board.
The consumer, it can spend if it wants. It has a lot of savings, but it's a question of confidence.
They're continuing to prioritizing services. They're continuing prioritizing food and drinking places.
The consumer will start to face headwinds, in our humble opinion.
It's going to be difficult to get to that last mile of inflation decline from 3% to 2%.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, this is Bloomberg Surveillance alongside Damian Sassower and Gina Martin Adams. I'm Matt Miller. Tom, John, and Lisa are all in Jackson Hole ahead of our special coverage tomorrow. I'm told that they are doing some reporting today. Obviously, there are a lot of very important people there hanging out at the wherever, the $1 Million Cowboy Bar or the Mangy Moose or whatever the cool place is to go. And then tomorrow, starting at 8 a.m., we'll have our special coverage of Jackson Hole. So 8 a.m., I believe, until noon New York time. It's 1 p.m. in London, 8 p.m. in Hong Kong. Definitely don't miss television. I can't wait to see if any of them is wearing a cowboy hat. Mike McKee had. Did you see him yesterday?
Yeah. I did. I was on radio with Mike.
Amazing outfit.
Yeah.
Always. He always comes to, he always brings it to Jackson Hole.
Not only did he have the cowboy hat, but the really dark glasses underneath. So he was incognito.
I hope John Farrow has just like a piece of straw in his mouth, you know? Talking about the ranch. No, it's going to be incredible coverage, and I can't wait to watch it. Today, the story is, as we've been talking about, really all about NVIDIA. Of course, there were other issues. Yesterday, we had the death of Yevgeny Prigozhin. Yesterday, we had the Republican debate, but not Donald Trump.
Right.
Yeah, and not Donald Trump meant not very many viewers and not much news.
There was an interview.
It was very interesting.
We showed a clip of, I think, Tucker Carlson interviewed the former president on Twitter.
Right.
Or it's now known as X, right? Yep. So I wonder if people chose to watch that rather than the debate.
You know, that's a really good question. I'd be curious to know what the viewership were for both the debate and for the Tucker Carlson interview.
Yeah.
That'd be interesting.
Side by side comparison.
Yeah.
He was still front and center in the conversation, though. You know, all the quotes this morning are, "What did Donald Trump think of the debate last night? What was Donald Trump weighing in on?" So, as much as he wasn't there, he was obviously looming as the figure that they're all gunning to beat, and it became very clear in the news flow this morning.
We also yesterday heard the sad news of the loss of Laszlo Barini. That was a man who loomed large over markets for the past 25, 30 years. He came up with money flow analysis, which is something that we all did a lot of back in the late 90s, early 2000s. He made incredibly prescient calls at the end of the internet bubble, and right at the bottom of the S&P, March 9th, 2009, he forecast stocks would then rise, and of course, he was very, very right. Laszlo Barini was 79 years old. Let's bring in Kara Murphy right now, Chief Chief Investment Officer over at Kestra Investment Management, to talk about what the markets look like from here. Kara, we've had an incredible rally year to date. The S&P 500 is up, what, 15, 16% already, and a lot of that being driven by what's being called the Magnificent Seven, and really hopes for AI on the back of the success of NVIDIA. How do you see it?
Well, first of all, I want to apologize for not bringing my cowboy hat today. I'm here in Austin, Texas, so I do have one, but next time.
Yes.
So in terms of the market, I mean, you're right in that we've had this incredible run so far this year, and it's been driven by just a handful of stocks. Now, we've been looking for a broadening out of this market, last night's NVIDIA results notwithstanding, but we do think that eventually we'll start to see leadership shift elsewhere. You know, think things like mid caps, small caps, industrials is another area that we're looking at, non-US stocks. So there still are a lot of very interesting opportunities in the market. And it doesnn't have to be just, you know, a party for the big seven.
Kara, dig in a little bit, if you would, on that small cap call. This is something we've been watching all year as well, but that group has just been stuck in this range. It seems to be really struggling to produce a breakout, which is very unique in the long-term perspective. Usually after a major low in stocks, small caps do outperform large caps, but something's holding small caps back. What is that thing, and what do you think is going to catalyze a breakout in this group?
Well, I think, again, we have some really great secular stories among those big seven. But when you look at the small cap stocks, we have this close to historic differential in valuations between large cap and small cap. So number one, you're being paid to take a little bit more risk in that space. And also, if you look at the Russell 2000, we're down more than 20% from the peak last year. So you're right, they are very much still very in the doldrums. But you know, that old maxim of buy low, sell high, you have a really nice opportunity there once the market does start to shift.
And can you talk a little bit about the broadening trade as well that you alluded to? If it's not the Magnificent Seven, particularly after NVIDIA's announcement last night, then where are we going to see some leadership develop in the S&P?
So one area that we've been looking at, as I mentioned, is industrials. That is an area of the economy that had suffered, you know, pretty early on as we saw industrial PMIs come down, industrial production come down. So we look like we're having some sort of bottoming in industrial production. If you look at valuations in the names in that sector, they're below their 10-year averages, as opposed to a lot of other sectors where we have some pretty lofty valuations. So again, you're being paid to sort of take that risk. And if that's the next area of the economy to sort of see a lift, we think that there are some opportunities there. But I also want to mention outside the U.S., if you look at non-U.S. stocks versus U.S., similar to small caps, you have some of the largest valuation differentials that you've seen in quite some time. You have much more attractive dividend yields. You have more realistic earnings expectations. So we think that there are some great opportunities out there as well.
Kara, credit card delinquencies are above pre-COVID levels, bankruptcies are rising, housing activity is in decline, yet primary activity in U.S. credit remains pretty healthy, right? I'm curious, what are your thoughts on U.S. credit, IG, high yield in the current environment, and do you think the Fed can actually achieve the ever-elusive soft landing?
So I think this dichotomy that you mentioned between, let's say, rising credit card delinquencies and still pretty active activity in the credit side is really because of the impact of monetary tightening. And this has been a very interesting cycle in that even though the Fed has raised rates an extraordinary amount, there are parts of the economy that still remain very, very insulated from it. So, I mean, if you look at outstanding mortgage, the average rate is about 3.5%. So a lot of people, a lot of companies are not feeling the pain of these higher interest rates. So with that, as we look, and particularly in high yield, a lot of those companies are termed out, so they're not going to see a heck of a lot of increase in debt until 2025. But we do think that we're going to start to see an increase in business bankruptcies. And so that's where, you know, as we look out on the credit curve, we would sort of stay more in investment grade credit, where we think those companies are a little bit more inoculated from higher interest rates.
Well, Kara, I mean, doesn't that really take us to the resilience of the U.S. consumer? I mean, everyone's talking about U.S. exceptionalism, but it's really been the U.S. consumer. Though this week, we saw some pretty weak results as some retailers. I'm thinking Foot Locker, I'm thinking Dick's. You know, talk to us a little bit about that. Is this the signal bears have been looking for?
So I think we're still early in that cycle. We don't think that it's flashing a red flag, but it's a yellow flag that's worth watching. And so typically consumer spending is a combination of confidence and also jobs. And so the labor market is still very, very tight. People are very comfortable in their jobs. We're still seeing decent wage increases. What we're seeing on the other side is confidence is maybe, being challenged a little bit. We have somewhat higher gas prices. And then we also have people who have wound down a lot of their COVID era savings. Now, we can debate about how much there might be left, but what we do know is that credit card balances started to go up earlier this year. And we also know that interest rates on that credit card debt has really gone up a lot. So it's taking a much bigger chunk out of people's paychecks. So it makes sense that consumers would be a little bit more cautious here. But again, these delinquency rates, if we look at a longer period of time than just compared to pre-COVID, they're still at pretty reasonable levels.
One of the things that Tom Keene points out a lot on this program is that we tend to aggregate this data, but it's important to look at, I think dichotomy is like the word of the day today, right? It's important to look at the fact that the lower 3 quintiles or 4 quintiles have definitely spent everything they saved up and got during COVID, and only the top 20% are still able to do well. Can that drive the market? Is that enough for the retail sector?
So typically that highest quintile of income has a disproportionate impact on overall, spending and GDP. That said, at the lower end, you have some interesting dynamics there as well, because during COVID, it was that cohort that actually saw by far the largest wage increases of any of them. So again, that means that they have a little bit more of a cushion, but the US economy can't grow forever with just that top 20% of spenders. So I think it is a concerning sign. And again, it's another sign that these lower income spenders are more interest rate sensitive than the high income spenders.
What's the economy like down there in Austin right now? From the boots on the ground perspective, cowboy boots on the ground perspective.
Allen's boots.
I would think it's red hot because you hear about people moving from high tax regions down to Texas and Florida. On the other hand, it is red hot, and that tends to crimp the economy, right?
Well, I would say, the economy is still booming here. As you said, there are a lot of people still moving in. You're starting with a relatively small population compared to a place like New York. So you don't need all that many people to move in to have it grow on a percentage basis. So still a lot of buildings, still a lot of new businesses opening up. And yes, it's hot, but eventually it won't be.
Kara Murphy there of Kestra Investment Management. Thank you so much for joining us out of Austin, Texas. I was down there a couple of months ago for the MotoGP race at COTA at the Circuit of the Americas. What a cool town.
What a cool town. It's like LA in the middle of Texas, right? South Congress. All those little places up. And then you've got Rainey Street. It's just an awesome city.
I was on Rainey Street all night, pretty much every night. Yeah. But
live music.
Yeah, very cool. Have you hung out in Austin?
Oh, yeah. I love the Riverwalk. I love to take a nice jog down the Riverwalk, not in this heat, but maybe in the winter months.
The heat is a real concern.
Is a great school.
Claudia Sahm wrote a Bloomberg opinion piece the other day about the fact that high heat has really had a negative effect on the economy. If you're a construction worker trying to get a house built, you're not going to have people out there doing it during the day in this heat.
Yeah, and all of that migration has gone down to the heated area of the United States, everything in the Southeast, in particular Southwest as well, and obviously we've had a massive weather event in the Southwest now with the hurricanes hitting Southern California. So where can you go? You're going to have to stay in those high-tax northern states if you want it to be cool and relatively stable.
Well, just to add one last thing, although I know we're leaving, basically there's a drought in Panama, and that's affecting a logjam in the Panama Canal. So if you want to talk about climate change and how that's kind of impacting things, look no further than the South-South.
Yeah.
All right, if you are just joining the program, we have NVIDIA earnings that came out after the bell yesterday, driving that stock higher in the pre-market. That drives the S&P higher in the pre-market. You see futures here up 0.6%. Coming up at 8 a.m., Bloomberg's Mike McKee in Jackson Hole speaking to former St. Louis Fed President Jim Bullard. That's an interview you don't want to miss. And coming up next, Bloomberg's Anne-Marie Hordern is going to join us on the first GOP debate, minus, of course, the front runner, former President Donald Trump. We'll talk to her as well about the reported death of Prigozhin taking a flight out of Moscow that crashed. This is Bloomberg. All All right, we are still looking ahead to a number of really important guests, as I just said there, and also to some data this morning, right? We're going to get jobless claims out.
Well, I think you have to look backwards. Look yesterday at the housing data. I mean, let's be clear, Matt. I mean, we saw some really, really weak numbers, but then we saw some interesting news on the new home sales front, right? I mean, they were better than expected. So, you know, if you're just looking at the state of the U.S. economy, I mean, it makes perfect sense, right? There's a supply overhang base. There's not enough supply, and with rates at current levels, it's just going to be very, very difficult to get anybody moving out of their current mortgages and looking at new ones. But, you know, I mean, we'll see how things go. We have some more data coming out today.
Yeah, and the housing market and the auto market have historically been these big leading indicators of economic growth, but they seem to be detached from what's happening in the rest of the economy. Is that sustainable? Is it not sustainable? It's definitely something to ponder as an investor, because the equity market is clearly on fire despite this negative macro news.
All right, coming up next, as I said, Bloomberg's Anne-Marie Horton joins us on the first GOP debate. This is Bloomberg.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing
Connection
and Shanghai.
Good morning,
everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Friday, European Central Bank President Christine Lagarde sits down with Bloomberg's Tom Keene for a conversation on the political economics of Europe and the permanent shifts in the global economy. Tune in for the exclusive interview live at 4 p.m. Eastern from Jackson Hole, only on Bloomberg.
Joe Biden's Bidenomics has led to the loss of $10,000 of spending power for the average family.
Unlock American energy. Drill, frack, burn coal, embrace nuclear. Put people back to work by no longer paying them more to stay at home. Reform the U.S. Fed. Stabilize the U.S. dollar.
Joe Biden has weakened America at home and abroad, and the American people have had enough.
Senator Tim Scott, Vivek Ramaswamy, and former Vice President Mike Pence there, just some of the voices from yesterday's GOP debate on Fox News. A lot of people probably already had the channel on, so watched that. Others maybe switched over to Twitter, which is now known as X, to watch the former president himself being interviewed by Tucker Carlson. Of course, Donald Trump was not at that debate, and Donald Trump is today, I guess, he's expected to head into Georgia.
Right. This is going to be the big news of the day, is what happens in Georgia again. So
Will
the
he get a
debate
mugshot? Is he going to get fingerprints?
Well,
I love Sea Island, Georgia.
Yeah.
Have you ever visited? It's one of my favorite
Sea Island
places.
is gorgeous.
It's beautiful.
Yeah, it's
beautiful.
unbelievable.
You know, speaking of climate, you know, we were just talking, I just had somebody write in. I mean, effectively what's going on is you have a 200-ship logjam outside the Panama Canal due to a drought that's going on there. So your average
There's not enough water in the Panama Canal.
Exactly.
Is the issue.
It was built in the I don't even know, the early 1900s. So the way it works with the locks and everything, I don't want to get into it. But I mean, if you want to talk about, something that might impact supply and be inflationary in nature, if it's certainly, we're not talking about the Suez Canal when that ship kind of completely blocked it for weeks, but, these little things begin to build up.
Yeah, absolutely. That's fascinating and concerning, right? Yeah. When there's not enough water in the Panama Canal. And we've had those kind of problems. I was living in Germany for the past 6 years. We've had those kind of problems for the last few years on the Rhine River as well. Also, something that's probably very inflationary.
Well, and speaking of Germany, the ECB has actually been way at the forefront of sort of trying to monetize or figure out the monetary impact of climate change. And ultimately, the results have shown that the impact will be through higher inflation volatility. Yeah. So to your point, all of these issues, as they pop up one after another, the net effect is higher inflation volatility over time, if not higher average inflation over time, which has pretty severe consequences for how you structure your portfolio, especially coming off of a period of time which was incredibly suppressed inflation volatility. Now we go to a higher inflation volatility landscape from a policy perspective as well as from a climate perspective. These are really strong sea changes that investors are going to have to contend with over not just the next year, but over the next several decades.
So climate change, I'm guessing that's not a topic that was really touched on too much at the Republican debate yesterday.
Might not have come up.
Let's get to Anne-Marie Horton, Bloomberg Washington correspondent, standing by after, I guess, having watched the whole thing last night. Anne-Marie, I hope you got some sleep. What was the main focus? Was it all about kind of piling on Vivek Ramaswamy for his Russia-Ukraine stance?
Well, there's a lot of different topics discussed, and as the Wall Street Journal editorial board really puts it this morning, without Trump in the room, or as Drudge Report is calling the Don List debate, there was this room to talk about policy. Climate change actually was one of them, Matt. Nikki Haley had a kind of a breakout moment there as well. There was a lot of pile-on on Vivek Ramaswamy, the billionaire, the entrepreneur. What was interesting is many thought that pile-on was going to be about the other individual in center stage, Governor DeSantis, but really the pile-on came to Vivek and some of his views, especially on foreign policy. This is where we saw him and Nikki Haley really go back and forth at it. And she said to him, "You have no foreign policy experience." She paused and she goes, "And it shows." So this was a moment where you had really hawkish Republicans take it to this idea of a more populist candidate who's been rising in the polls. When I was flipping through a lot of channels this morning that had a lot of individuals and voters talking about what they thought of the debate last night, for the primary voters, Vivek Ramaswamy is someone that is resonating. But for a potential general election, when you need to draw independents, a lot of people are talking about Nikki Haley, and the Wall Street Journal editorial board this morning is saying she was a, quote, pleasant surprise.
That's really interesting, Anne-Marie. What was it about Nikki Haley that really stood out?
So I think that one moment she had with Vivek Ramaswamy talking about foreign policy, she really went through it. She said he wants to have China eat Taiwan. He wants to allow Putin to just take over Ukraine. And then she also went into his remarks about aid to Israel. This was a moment where she was able to show in her former post as the ambassador of the United Nations some of her foreign policy chops. There was also a moment where no one really was able to match her, and this was on abortion. She really wanted to level with the American people, saying that there can never be really an abortion ban. We should never say never, but she said it would be very difficult given the fact that you would need 60 senators in Congress. And she said that is something we do not have. So we need to have a consensus. And she talked about a consensus that potentially could be actually one that could be struck in Congress between Democrats and Republicans. For this moment, then you had Mike Pence come back with her, and he said consensus is not leadership. But her views on abortion might be something that could do her well in a general election, because we know that abortion is one really voting is really a voting driver for a lot of independent voters. And we saw that in the midterm elections after we had that strike down of Roe v. Wade. Yeah, exactly. Strike down of Roe v. Wade from the Supreme Court. So she took this tone that potentially could bode well for her if she was to be the nominee in the general.
Anne-Marie, I didn't see the entirety of last night's debate, but, from what I can tell is Governor DeSantis stayed out of the line of fire. Who were the winners and who were the losers last night? I mean, was that the right approach by Governor DeSantis to sort of sit back and let, everyone else duel it out? I mean, and for that matter, Did Donald Trump come away last night? I mean, what happens to him? Was he a winner and loser by default?
So two things. I think Governor DeSantis stuck to the sidelines, but the bar seemed so low from his camp. They really just wanted to make sure he got out of this alive and was still living on the next day in the polls. So if the bar is that low, he cleared it. He didn't get too much into the back and forths, but he came with his very well-prepared remarks and really defended what he said was his policies in Florida that should be the policies he wants to take nationally. Most notably, he leaned into COVID and took a swipe at Trump and how he handled Anthony Fauci. When it comes to the former president, I did also catch part of his interview on Twitter with Tucker Carlson. Not a ton of news was broken there, and he talked about the fact that he thinks everyone is just against him and he can get more ratings on this crazy platform. But the former president not there, he was also asked about, very much the elephant not in the room. And this was the question that was asked about him. The candidates were asked by moderators to raise their hands if they would support Trump as the GOP nominee if he was convicted on criminal charges. Mostly all of them raised their hands, Amazing. 6 out of these 8 candidates. And they really put it back to the weaponization of the Justice Department. They are doing this also because they don't want to ostracize those individuals that are supporting the former president because he is just dominating them by 40 percentage leads in these polls. And while potentially today we're talking about all these candidates that maybe shined on the debate stage, by this evening, you are likely going to see the former president go down to Fulton County, Georgia, and turn himself in, and there'll be a mugshot, likely, that is just going to blow up the internet. And then once again, he's going to be dominating the news cycle.
Yeah, it does seem like the indictments have really helped, although it's an interesting question as to whether he'll be able to run at all, considering the 14th Amendment. Anne-Marie, what about President Biden? A number of viewers have been writing into me this morning asking, okay, the Republican debate, fine. Is President Biden going to get primaried, or who would actually run if he decides, after a year and a half still to go, that he won't run?
Well, at this moment, President Biden is certainly running to be the nominee.
Right, but he'll be 82 next November.
His campaign was on full display, and that was a question that was asked yesterday about age limits. If you're looking for potentials on the Democratic bench, I think you have to look to the governors. Governor Newsom, who's been trying to build up a national case, even sat down for a very long-ranging interview on Fox News recently with Sean Hannity. And then, of course, someone like Governor Pritzker, who has the cash to really potentially get in at a last minute. But at this moment, everyone is talking about Biden, and it will be Biden.
All right, Anne-Marie Hordern joining us from Washington, D.C. Thank you so much for that. No one better to talk to than AMH when it comes to Washington. Coming up next, Earl Davis of BMO Global Asset Management gives us his take on fixed income. This is Bloomberg.
sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Surveillance on Bloomberg Television and Radio. I'm Matt Miller with Gina Martin Adams and Damian Sassower. Tom, John, and Lisa are, well, I would say they're off today. They're off air, but they're still working. They're in Jackson Hole.
Working. So we're told.
Yeah, working the restaurants and bars and, talking to other economists and market participants who are out there. And I think it's a great thing that they're doing. And we'll see them tomorrow on their special. Jackson Hole special coverage starts at 8 a.m. New York time on Bloomberg Radio. I want to get into some of the big stories we're watching this morning. Under surveillance is obviously NVIDIA, soaring in the pre-market following another blowout forecast fueled by demand for the AI chips that NVIDIA makes. The company's CEO dispelling fears that production will not keep up with demand. Jensen Huang says, quote, "We're focused on increasing our supply. We have to do that with great urgency, and we are." And this is one of, I think, the most interesting things because a lot of people want to make AI chips like AMD and Intel, and NVIDIA doesn't actually produce chips itself. TSMC supplies them with all of the chips that they order, and I guess they're doing a good job filling those order books.
Yeah, and certainly Mandeep Singh did a great job of sort of articulating this for us, but they seem to have been able to convince TSMC to basically work for NVIDIA. They have no problem getting the TSMC to feed them what they need, which is a pretty big shift in the marketplace from where we've been just 3-6 months ago. This was a potentially huge issue. So that's a big win for NVIDIA and a big win for the theme at large in terms of its potential impact.
Well, I was most impressed just with the forward guidance, or rather Mandeep's perspective of the forward guidance. He's comfortable with it, and that was the big question going into yesterday. Is forward guidance going to be strong? Is it going to be able to satisfy, what the markets are looking for? And apparently the answer is a resounding yes.
Yeah, he thinks they're even sandbagging a little bit.
I mean, right, exactly.
Yeah, very interesting stuff. Also, Boeing has found a new defect in its 737 MAX jet, threatening to derail delivery targets for its top-selling model. The airplane manufacturer found, brace yourself, improperly drilled holes in a component that helps to maintain cabin pressure. That doesn't sound good at all. The FAA said the issue is not a safety threat, but it would still worry me.
Yeah. I mean, look, Matt, Qantas just ordered a bunch of Airbus, Qantas, the Australian airline. So, I mean, I think that speaks volumes about the perception
once the safest airline in the world.
Absolutely. And I think it speaks volumes on just, how, I don't want to say how far Boeing sunk, but the quality of its product now is just, it leaves something to be desired, I think.
Yeah, how many years now have we heard something seems to pop up for Boeing? Yeah. Just about every year, every other year. This is the latest in a series of issues that have popped up, which is a great shame considering how robust activity has been in the airline industry and air passenger traffic, still very, very strong. I've been traveling all over the place this summer. Every jet I'm on is completely packed. Every airport, you can barely get through. It's been an incredible amount of traffic and a really robust rally and recovery after those pandemic lows in that space. So, you know, it's a shame for Boeing not to be able to participate to the degree that maybe they could have with a better reputation.
Now, Gina, when you travel, do you look at the plane you're going to be on before?
Do you check?
No, I don't. I probably should.
No McDonnell Douglas
you know,
for me.
I
don't do McDonnell Douglas.
I don't know if I can handle that
fly
mental.
those anymore?
The mental anguish that would create for me is far too much. So I just sort of blindly get on, do what I need to do to get to the place I'm going to go, and you know, keep your fingers crossed.
I mean, I
that you
look
get
when
there
I
safely.
can't. If I have a choice, I'll fly a 747-800 any time of the day. You know, and then I like the wide bodies, but they're so rare that you usually have to accept that you're on a 737 or an A320, and they're just too cramped for me.
Too slim
I'm a big guy.
Yeah.
A Republican presidential candidates targeting Joe Biden in the first debate of the 2024 race, with leading contender Donald Trump notably absent from the debate. Candidates debated the U.S. economy while also sparring over foreign policy, as well as abortion rights and border policy. Anne-Marie Horton telling us that Nikki Haley even brought up climate change. It's interesting. We just saw a picture there, Chris Christie. He doesn't want anything to do with Donald Trump in politics ever again. I'm sure, I would assume Mike Pence doesn't either, but the rest of them seem just to want second place.
Yeah, I know. It's so fascinating, right? It's hard to watch and think, do we take this seriously as, you know, the real candidates for the Republican ticket or not, considering that the frontrunner is not even on the stage and is doing another interview separately and then coming in and bashing the entire stage of participants later. So it's very difficult to sort of get your head around the meaning behind this particular debate. That said, it appears that there were a couple of standouts. So let's see where they go. It's very early in the process yet. We've got a whole year left till we get to the actual general election. So I'm sure there will be plenty of twists and turns. But nonetheless, I guess there were a few takeaways.
Well, I was encouraged that AMH said that Nikki Haley had performed rather well. You know, I mean, that's a good thing, I think. But what's interesting is no one's talking about Mike Pence this morning.
No.
So, you know, that is a very interesting outcome because, you know, one would have thought at least he'd use that as a forum to really, you know, talk about himself, about his policies, and I guess, you know,
or
the message didn't, right,
for that matter. These are, you know, DeSantis presumably was the front runner just a few weeks ago, months ago, didn't really stand out last night. I mean, Anne-Marie informed us that the bar was very low from his team. Maybe that was by design, but nonetheless, really didn't make a strong impression.
All right, let's go from politics to fixed income. I don't really have a great pivot for that. But Earl Davis joins us, head of fixed income and money markets at BMO Asset Management. Earl, great to get your time. My first question is one that, you know, maybe won't make a lot of sense, but I feel like NVIDIA has had such a huge effect on a lot of different asset classes. Do you see an NVIDIA effect in fixed income at all?
Oh, we definitely do on the credit side of things. If you look at the CDX, which is basically the derivative for credits, that rallies or gets stronger. So spreads narrow when you see NVIDIA do well, just because it does impact the risk tone for all risk assets.
So moving beyond NVIDIA, other big news obviously is Jackson Hole. What are we gonna see at Jackson Hole, Earl? What are you looking for, and how do you anticipate the bond market reaction to be?
Yeah, I actually think we're on the cusp of a seminal change in Fed approach to targeting inflation and the resiliency of the economy. I think now they're going to pivot from overnight rates to targeting 10-year to 30-year rates. And they'll do that through one of two things and maybe both. They'll either mention that they're comfortable with a 3% target on inflation as opposed to 2%. That's basically 100 basis points higher impact on nominal rates. Or they might say, you know what, neutral rate actually we think is higher than we originally believed because we're seeing such a resilient economy. Again, that could have, you know, a 50 basis point target on the higher rate. So what I think they're going to do is, you know what, they're coming to the end of hikes. That's without a doubt. I think 6% is a hard cap. But they're going to let the term rates do the rest of the bring in more resistance to the economy, you know, make it more restrictive.
Earl, thanks for joining. Longtime reader, big fan of your work. Let's talk about rate differentials, something you've written about extensively, specifically rate differentials between the U.S. and Japan. we talk about foreign demand for U.S. treasuries. We talk about Japanese buying of U.S. treasuries, or should we say Japanese selling of U.S. treasuries? What exactly is going on there? Why would, an investor in Japan where yields are so far much lower than that in the U.S. be pulling out of U.S. treasuries and investing it back at home in JGBs?
Yeah, you know what? How it has an impact. Prior to my role now as an asset manager, I used to be an asset owner. I used to run a fixed income group with $100 billion in fixed income. And how we looked at interest rates was through developed markets interchangeably, diversification and the like, because the underlying fundamentals for all developed markets, as we're seeing now, is very similar. So in regards to rate differentials, I think there's more than just Japan to look at. Japanese 10-year bonds are 0.65. We could see that going as high as 1%. That's 35 basis points higher. That has a substitution effect on treasuries. The other two markets to look at from rate differentials is the UK. UK has a serious inflation issue. They have growth issue. But right now, rates in the UK are 460, about 450 to make the math easy. We could see that easily go towards 8% to fight inflation that they have there. And the final country to keep an eye on is Germany. People really like using Germany and US interchangeably. Rates there are around 250, and that could go significantly higher because of the same underlying inflation impacts that are affecting the world globally. And wages are more important than CPI inflation right now.
Earl, we had a poor 30-year auction last week that obviously stoked the bid higher in yields and all that good stuff. I'm wondering, can you talk to us about the plumbing of U.S. financial markets? I'm talking the TGA, the RRP, Fed runoff, et cetera. Where do you see pockets of risk building, if at all?
It's a great question. I actually think the markets from a risk perspective, financial stability perspective, are very safe now. The plumbing, the backdrop, especially after March, that the Fed has put into place, you're seeing it there. Where you're seeing risk is just a repricing of bonds because of what we're saying. Interest rates globally could go higher. That makes us go higher. Another thing that could impact the U.S. is interest payments. They're significant. And the assumptions right now by the CBO for interest payments is 3%. T-bills are at 5%. So just think of how that could add to the deficit over time. So where the risk is that repricing to higher rates, as well as mortgage hedging by banks. If rates go higher because of negative convexity, the duration on banks' books go higher, and they have to sell bonds. So I don't think it's a financial stability question, but there will definitely be murmurs in the market.
Gary Schilling, a few months ago, or maybe last year, did a survey looking at how the U.S. dealt with the highest average interest rate in terms of servicing our debt. I think it was the early 90s. We got to a little over 6%, in terms of the average. We're not there yet, but when does it become a problem? When does debt servicing become a real problem for the U.S. economy?
You know what? There was an article in the paper a couple of weeks ago which says, the deficit could rise by $3 trillion in 10 years. That could be significant. I think the U.S. in regards to servicing its debt is fine right now. We're still the country of choice. We're still the reserve country of choice. And I think the change to other countries as a reserve or currencies as a reserve is 10, 20 years away. So I think the U.S. is in good state right now in regards to debt servicing. I don't think there's going to be a Minsky moment from not being able to service debts and they print their own currency, but there will be higher levels. And a key thing to remember, the last thing one-year T-bills were at this level in the U.S. was basically 2000. 10-year bonds at that time were 6%. It wasn't the 90s as far as the 90s. Early 2000s, we were at 6% in 10-year bonds. Not average, but 10-year bond yields.
All right, Earl, thanks so much for joining us. Great to get your perspective out of Toronto. Earl Davis there of BMO Asset Management talking to us about fixed income. In terms of what to expect from Jackson Hole, or ever, the Fed is not going to change its target rate.
Yeah,
no matter how much you hate 2%, no matter how silly you think it is that central banks around the world have adopted it, it's here to stay.
Right. Well, and I think the Fed has been very careful to even say 2%-ish. Sure, that sounds good, but they will even very explicitly state that 2% is not their specific target. So I don't think that they want to go to a target.
But how many
They don't
times
wanna
has
guide
Jerome
to a
Powell said
range.
he's not going to stop until
Yeah,
we
they'll
get
say
closer to 2%?
Closer to 2%, though. You see what I mean? There's the language around this, I think, is very meaningful because the Fed is specifically does not want to become the ECB with an inflation target per se. They do have a dual mandate. They're very careful about this. And anything near-ish 2% has historically been fine. Closer to 2% is the latest language of the day. That 3% comment was pretty compelling. If they do move to some sort of 3% level, I think that would really create massive rifts.
Well, in that case, thank God we have Tom, John, and Lisa out at Jackson Hole.
for sure.
As well as Mike McKee and whoever else we've sent out there.
Maybe they're picking this up at the bars.
Because that would be genuine news. Let's take a look at what's going on. If you're just joining the program, we're looking at rates rising again. 10-year up at 421, and the S&P 500 futures are up 0.6%. Coming up at 8:30 a.m., Michael Darda, chief economist and macro strategist at Roth MKM Partners, is going to join us. I got to ask him about Laszlo Barini as well, because surely in Michael Darda's career, he's had a look at money flow analysis and the importance of that. And I wonder what the conviction is behind people who are piling back in to equities right now, like Max, who says that he is buying this dip. Coming up, Jim Tobin of the National Association of Home Builders. This is Bloomberg.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present it with a plan.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
I don't think this is the moment to declare victory. I mean, yes, I know on the one hand you want to say, inflation is declining and we've got economic growth, but we have 5.5% interest rates and we have close to 6% GDP. I mean, that is not a soft landing economy. That is a no landing economy. That is an accelerating economy.
That was Anastasia Amoroso, Chief Investment Strategist over at iCapital, talking about the economy. We got some fascinating news on the U.S. economy yesterday in terms of housing when we saw new home sales rise. I mean, we expected a rise, but they were even higher than expected. I think 4.4% month on month. So a really strong picture for the new stuff because there's not enough of the used stuff. Jim Tobin, President and CEO of the National Association of Home Builders, joins us now. Jim, you know, the home builders have been on fire in terms of the stocks this year. And as long as people with 3% mortgages aren't willing to get out of those and go to 7%, which, you know, obviously they're not going to, new homes are the only game in town, but they have problems as well, don't they, in terms of costs, in terms of finding workers, in terms of those high interest rates themselves. How does it look to you?
Yeah, thanks for having me this morning. It's simply this. New home sales continue to kind of defy gravity of all of those headwinds you talked about. We continue to fight the labor shortage, the persistent labor shortage in the construction market. We continue to fight, obviously, 7% mortgage rates. And we continue to fight just supply chain costs. We're still looking at a transformer shortage. We're still talking about other supply chain issues that continue not only to drive up costs, but when you take those three together, it's strange that housing, new home sales continues to be this strong. But like you said, we're the only game in town.
Do you think, Jim, that there is a level of mortgage rates that does slow down activity? I mean, we've been talking about 7.5%, 8% mortgages, depending upon the mortgage type, as likely over the course of the next few months. Is 8% a magic level? Is there a level that you would watch for where you see a material slowdown in activity?
Well, yeah, well, I would have thought 7% was it, but obviously, well, and remember, we're looking at July numbers, right? And in July, mortgage rates are really at 6.7%. I think the August numbers, we may not see as robust activity and optimistic numbers when we get later and look back on August. I think that 7, north of 7 is psychological. 6 is a round number. 7's a pointy number, and so my feeling is that we're still we're not quite at the top of what rates look like. So I think 7.5 might be that magic moment. But again, when new home sales are the only game in town, and you're a creditworthy borrower and you want to get into that ownership space, maybe you find a way to do it. Plus, there's a lot of people chirping in a lot of people's ears talking about, hey, you can get in the market now, and eventually when rates subside, you can refi. So. If you're a creditworthy borrower, there's still a lot of opportunity out there in the new product market.
But it does appear that activity has slowed enough relative to the supply advance to create some near-term imbalances. You talk in your notes to us about the month's supply on the market of just above 7. Neutral apparently is about 6. Talk us through what's happening with new supply. The builders do seem to be pretty optimistic and are continuing to put houses on the market.
Yeah, it's just, again, we're the only game in town, and in those markets where there's still high demand and inflow of population, we're still seeing that we can sustain this demand. But like you said, but for how long, and at what point is that break point where people really truly sit on the sidelines? And that's why it's really important. I'm really curious what Chair Powell has to say on Friday. Are we finally at the end of their rate tightening phase? We have one more rate increase, maybe 2, I don't know. But remember, shelter inflation is 90% of the core CPI right now. If Chair Powell, he could fix this if he wants. He could continue to raise interest rates and crush the housing market. We've already seen what we're going through right now is because of that. Or policymakers can decide to help the Fed out, get us to that soft landing by creating policies at all 3 levels of government that help us put more supply in place and drive down costs the old-fashioned way. Meet demand with more supply.
Jim, U.S. new home sales rose to their highest level in over a year yesterday. But I mean, if you look at mortgage applications, they fell to their lowest in 3 decades. If you look at the mortgage purchase index, it's at its lowest since 1996. The basics index, which includes refis, at its lowest since 1995. Applications, sales, rates, supply. What data points are most important to you right now to give you a sense of the state of the U.S. housing market?
I think it's permits. That's the biggest forward-looking piece that we can figure out what our members are looking at down the road. Of course, the NHB, Wells Fargo, HMI is another one. Forward sentiment 6 months out. We saw that for the first time this year. That fell 6 points back to a neutral 50 a couple of weeks ago after 7 straight months of an increase in optimism by our members. That was following the entire 12 months of falling in 2022. So I'm wondering if our members are starting to get a little bit more skittish. Like I said, we talked about those headwinds. Interest rates are the biggest part of that right now, despite demand still being out there. And that's why it's critical, like I just mentioned, that policymakers help us out because I'm as much as I respect Chair Powell, what the Fed's trying to do and bring that soft landing. He has his eye on housing, and my fear is that they're going to go a little bit too far in order to cool the housing market, or at least really get shelter inflation down to a more manageable level so they can meet that 2% target.
Jim, I know base effects play a role here, but new home sales were up pretty much across the country with the exception of the West, which, were down 8.1%, the affordability challenged West, as it were. Talk to us a little bit about the challenges that are going on there. What will it take to right the ship out West?
Well, I really think when you look at California and the West Coast states, they're amongst the most overly regulated states when it comes to home building in the U.S. And when there's such a big part of that, my feeling there is that while California has a housing crisis, and the governor out there is trying to get localities to play ball a little bit more. Home prices in California are absolutely out of control. They're the highest in the nation. But then you start working your way east through Phoenix and Nevada, and people still want to, despite all the headline risk of the heat out there, people still want to move to those states because there's a little bit freer economy. There's home prices are a little bit more manageable out there. Again, despite the weather at the moment, it's still a nice place to live. So I think it's just if governments get out of the way and let our members build, we're going to find that the West will catch up.
Oh, the West is the best, man. If I could find a job out there, I'd be there in a heartbeat. Jim, what about, buying points, getting those rates down? What can the businesses in the National Association of Home Builders do to help prospective buyers get in at 6% or 5%? And are they doing that?
Yeah, we are seeing some members do rate buy downs. We're seeing discounted prices on homes to help help on the cost side to match those increased in rates. And we're also seeing a trend in smaller homes. If the one way to lower the cost of a home is just not to build as much square footage, that's a trend we always see when markets constrict like this. Is that a smaller product that people are willing to get into in order to meet those cost constraints. Those are three of the ways that builders are trying to fight this environment right now and make sure they can still move product and, more importantly, get people into home ownership.
Jim, thanks so much for joining us. Jim Tobin there of the National Association of Home Builders talking to us about the big spike in new home sales that we saw yesterday. Month over month, it was 4.4%. But if you look year over year, it was 31.5%. And base effects are important, but man, that's a huge jump.
Yeah, still. And it's kind of baffling. I mean, as he mentioned, 7%, everybody thought 7% would be the rate at which activity started to slow. Now maybe it's 8%. No one knows where this rate is. We know that people still have jobs. They still have income growth. They still want to own a home. And they're still looking, at least for now.
Someone needs to answer for me who these animals are up in Westchester that can pay $2 to $3 million for an apartment, waive all their contingencies, all cash. I mean, it's crazy out there.
25%. Yesterday, Toll said 25% of their sales were cash sales.
Yeah.
And that's a luxury home builder. But I guess those are the people that actually have the cash to do that kind of transaction. Coming up, Bloomberg's Mike McKee joins us out of Jackson Hole. He's going to be speaking with former St. Louis Fed President Jim Bullard. We'll get his take on the possibility of a soft landing. This is Bloomberg.
Been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why It's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted. And I think many people, even in the markets, have not quite understood in my mind how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Now, unfortunately, we've seen this deterioration in breadth, and it's sort of across the board.
The consumer, it can spend if it wants. It has a lot of savings, but it's a question of confidence.
They're continuing to prioritizing services, they're continuing prioritizing food and drinking places.
The consumer will start to face headwinds, in our humble opinion.
It's going to be difficult to get to that last mile of inflation decline from 3% to 2%.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, this is Bloomberg Surveillance alongside Damian Sassower and Gina Martin Adams. I am Matt Miller. Tom, John, and Lisa are on assignment today in Jackson Hole ahead of our special coverage tomorrow. That's a show you don't want to miss. Tomorrow morning, starting at 8 a.m., Lisa, John, and Tom will be broadcasting from the Economic Symposium, the Kansas City Federal Reserve's symposium there at Jackson Hole, and they'll be on Bloomberg Television through noon. So great coverage that we expect. Man, there's a lot to talk about, and I didn't think we were going to even consider the fact that they would move the inflation target. We don't really think that's a possibility, right?
No, well, Earl Davis thinks it's a possibility, so it's a possibility, I guess. It doesn't seem possible to me. It seems the Fed wants to keep that as waffly as they possibly can and just sort of ease the inflation rate lower with some flexibility.
I feel like they say 2% so much that even if they use language that waffles around it, I think everybody expects 2%.
Well, I think it was interesting that he said the real goal of the Fed is going to be to kind of target the long end of the yield curve, which they can't do. But nevertheless, it seems to be interesting that, just to even suggest the fact that they can even have an impact or an influence over it, it's kind of interesting to me.
Yeah.
Let's get out to Jackson Hole right now. Bloomberg's Mike McKee kicks off our coverage with former St. Louis Fed President Jim Bullard, now at Purdue. Mike, take it away.
Well, good morning, everybody, and good morning to Jim Bullard. It's a tradition here at Jackson Hole that we start our coverage with an interview with Jim Bullard. Every year we come out at 6 a.m. in the morning, and Jim joins us in the cold. Jim left the Fed, but we're not letting him get away. He's joining us now from Purdue University, where he is the dean of the Daniels School of Business. Welcome back to our show, Jim, even if you're not here in person.
Well, I'm glad to be here, and I wore my Jackson Hole coat in solidarity with the cold weather that you have to endure every year when you're out in the mountains there.
Well, I offered you coffee. I just want everybody to know that, but you didn't want to come get some. The first question, and I'm not the only person to wonder this, and I'm sure you know this, is why you left the Fed when you did, and why you took this job that you have now.
Well, this is a great challenge for me and for the Mitch Daniels School of Business. We're going to get much better. We're already good, but we're going to go to great. And I thought it'd be a great opportunity. I have been in the Fed for 15 years as president and longer before that. So my time was running out. So this is a great challenge later in my career. So I'm really looking forward to it.
Well, you recently moved, so you still, I'm sure, have a lot of economics and monetary policy on your brain. Let me pick it a little bit and ask you what you think of the economy at the moment. If you were still trying to decide whether you would vote one way or another, are we getting signals that give you a strong view one way or another?
I think the biggest question right now is the reacceleration in the U.S. economy. Atlanta Fed's GDP now showing substantially above trend growth for the U.S. economy in the third quarter. That's following higher than expected growth in the first half of 2023, and for that matter, in the second half of 2022. So I think that those that have been predicting imminent recession are having a lot of trouble here. It doesn't seem to be happening, and this reacceleration could put upward pressure on inflation, stem the disinflation that we're seeing, and instead delay plans for the Fed to change policy.
How are we going to do it? Let me separate those questions out a little bit in terms of inflation, absent the growth level that we have at the moment, and of course that's just a very early read from the Atlanta Fed. Absent that, would you be thinking that inflation would reaccelerate anyway, based on what you've seen in the economy?
There's some talk about base effects fading and going the other way during the second half of the year, so we'll see if that occurs. I like to look at the 12-month numbers because they rinse out some of the seasonal effects. And so you could get at least a pause in the disinflation or even a little bit of reacceleration. I think that would suggest a higher rate profile for the Fed than otherwise. So yeah, it could happen.
Well, Chairman Powell and the other members of the committee have been very careful in what they've said about additional rate increases because they seem to feel they're pretty tight right now and they want to make sure they don't tip the economy into recession. How great a danger do you think that is?
Yeah, I don't know. I think the committee should take a little bit of a victory lap here. I mean, the unemployment rate is 3.5%, and we were very aggressive in 2022 and into 2023. But the real side of the economy has been growing faster than potential. Labor market is still very strong. That should support consumption, which should continue to proceed apace here in the second half of 2023. So, and in the meantime, CPI inflation, headline CPI inflation was actually on a 12-month basis was 9% at one point, now 3%. And the core measures are coming down as well. So it really looks like the 2022 policy, including 75 basis point hikes, 4 meetings in a row, has a good chance of success. You never know, but it seems like it has a good chance of success here. So if there was ever a soft landing, taking 6 percentage points off the headline inflation rate without an increase in unemployment would sound like a soft landing to me.
Well, the argument some of your former colleagues make about not raising rates further is that we have long and variable lags that are just beginning to hit the economy. That 2022 rate increase path is only just beginning to hit the economy. And we have seen some of the sentiment indicators suggest that. We have seen manufacturing drop off. Do you think that we really need more rate increases, or should we wait and see if these lags are finally starting to hit and this speedy economy will slow down at last?
Yeah, I don't think that the long and variable lags are quite what they were when Milton Friedman first talked about them decades ago. I think a lot of the transmission is much faster than it was at that time. I would point to housing as one of the prime examples. The housing market basically came to a stop in the spring of 2022, and at that point, the committee hadn't actually done anything. The policy rate was still not very far from zero at that point, but the markets anticipate what the Fed is going to do, and so you got a big impact in the spring and summer and fall of 2022 on the housing market. So that's an example of how markets pull forward the policy of the Fed, and I think that's more prevalent today than it would have been in the 60s or the 70s. So I think these long and variable lag estimates are a little out of date. You have to think about transmission coming much faster than it would have during that period of time.
A couple of newspaper stories, and now all Wall Street is talking about is R-star and whether the Fed is going to be adjusting its estimates. Two questions. One, what do you think it is, and does it tell you anything? And the second question is it really relevant to policy at this point?
Yeah, I think it is relevant, but we don't have very good estimates of this number. I think Chair Powell has said we really don't know. I think that was one quote from him on the R-star. So it is an interesting debate, but you probably can't make too much of it because the estimates are so uncertain. I do think it matters, though, because people want to have some idea of where they think they're going in the medium term.
Well, that's my next question is, where do you think we're going in the medium term? You've got some people who think, John Williams, New York Fed president, that R-star, the neutral rate of interest, let's put it that way, is going to be somewhere where it was prior to the pandemic. Others think we've moved into a new regime, to quote the old St. Louis Fed president, Jim Bullard, and we're going to be back to, say, the 1990s versions of interest rates and growth rates and inflation rates. Where do you think we come out of this pandemic?
Yeah, I think the probabilities are that we are in a new regime that'll be a higher interest rate regime. It'll be more like the 90s than we're used to in the last 2 decades. And the reason I say that is that inflation is above target today. Core inflation is likely to be sticky and come down rather slowly. And the rule of thumb would be that the policy rate has to be above the inflation rate in order to continue to push inflation back toward our 2% target. So you would expect from those considerations that interest rates would be, rather high over this time frame going forward over the medium term, more like the 90s, less like the 09 to 2019 period where you had inflation below target and interest rates pinned down at low levels. So I think we have probably switched here to a higher interest rate regime with a higher nominal interest rate. Now, I would say about the 90s, you and I have talked about this before, the second half of the 90s was actually one of the best periods for U.S. macroeconomic performance. So, maybe it's a good sign for the economy. The economy can boom even with a higher nominal interest rate environment.
Well, we'll hope you're correct. Jim Bullard, the Dean of the Business School at Purdue University, the Daniels Business School. Thank you for joining us and helping us kick off, once again, our Jackson Hole coverage. Matt?
Michael McKee, thanks very much for that. And thanks also to former St. Louis Fed President Jim Bullard, who was at Purdue but still wearing his Jackson Hole windbreaker. So I thought that was quite fitting. He said that he thinks rates or the transmission mechanism is faster. And I was a little bit surprised by that. If you're just joining the program, we see the S&P 500 futures at least rising just about 0.5%. You know, the puzzling thing to me is that I thought long and variable lags were even longer now because everybody has a fixed rate mortgage, right? So nobody's moving out of a 3% mortgage, and doesn't matter to most of the country that mortgage rates are at 7%.
But we are more debt dependent. So if you think about how the U.S. economy works, there is a greater degree of debt dependency certainly than there was in the 60s and 70s, especially in the private sector, especially in households. And I think that that's what he means by the long and variable lags are not nearly as significant. Interest rates should be impacting the U.S. economy.
I can't believe we're talking about transmission when GDP is running at 4% this quarter and unemployment's at 3.5%, but that's just me.
Well, that speaks to the level, right? What is the neutral rate supposed to be, I think, is the really key question.
We're going to talk about that at 8:30 a.m. with Michael Darda of Roth MKM Partners. This is Bloomberg.
Studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
recently that the market's decided to believe the Fed and to believe the fact that there won't be an interest rate cut from the US by the end of the year. And that we've seen that coming through into the US dollar. But I suspect that there's further to go, because I think the market's going to be looking at the European data, the UK data, such as those PMIs that we saw this week, and think, why am I so long euro? Why am I so long sterling? Maybe I should rethink my dollar positions.
That was Jane Foley, head of FX strategy over at Rabobank, talking to us about the U.S. dollar strength that we've been seeing, really due to the higher rates. Of course, those came down quite a bit yesterday, but we still see the Bloomberg Dollar Index at just about 1240, so at relatively high levels. Diana Amoa, CIO of Long Bias Strategies at Kirkoswald Asset Management, joins us now to talk about everything that's going on in these markets. So, Diana, really appreciate you coming into the Bloomberg Surveillance Studios this morning. What's your view of what we see going on here with, a couple days ago we were at 434 on the 10-year, and it didn't seem to dissuade everybody from still keeping these equity markets at relatively high levels.
So I think what's been supporting equities, despite the higher rates that we're seeing, is actually the earnings. I think this last earnings season especially surprised. We've seen significant revisions in some of the key sectors that are big components of the indices, such as in the tech sector, that is actually giving investors a degree of comfort that companies can still generate profits even with higher funding costs.
And you are seeing across the world some central banks start to pivot toward a more dovish policy already. Can you talk about the implications of that and how you see that playing out over the next 6 to 12 months?
Indeed. So what we're seeing right now is some of the specific inflationary trends that we've been seeing into last year have turned into strong disinflation. And I think markets underappreciate just how synchronized the disinflation we're seeing globally is. Similarly to when we started seeing inflation pick up and the developed markets were ignoring the signs, thinking it was EM specific or transitory, I think the extent to which we get global disinflation might catch markets by surprise. So that's the one thing that has been a big turn, and especially in the context of growth outside the US is actually looking quite lackluster. We've seen the PMIs out of Europe, we've seen the data out of China, we've seen data out of specific emerging market economies, whether you're looking at things like retail sales in Central and Eastern Europe, credit growth across a number of key economies. All of these are pointing to tighter financial conditions starting to hit growth, and inflation is actually off the highs, and we're seeing disinflation, which means central bankers can start to cut rates. And indeed, over the last few months, we've seen Brazil cutting rates, Chile cutting rates. We expect we might see Poland next as one of the major emerging markets to start easing rates as well.
So are we moving into a world then, as you correctly identified, where emerging markets led developed markets on the inflation front? Are emerging markets likely to lead developed markets on the central banking front through the disinflationary phase? And then how do you structure a portfolio in an environment where emerging markets are potentially leading developed markets? That seems a very different sort of investment construct than that which we've lived in for much of the last 20 years.
It is indeed, and I keep saying this over and over. For the first time, the inflation dynamics in EM that we've experienced over the last few decades are actually coming in as an advantage to policymakers in EM who are early to hike, and they hiked aggressively. So they got to their terminal rates much faster and have been on hold for long enough, so keeping monetary conditions tight enough that inflation is responding, consumption is actually slowing down across a number of economies. In that context, portfolio construction would argue that if there is a chance that we might have recession in some of the key economies, you need to have some duration in your portfolio. And I know, given the context of the price action we saw in August, duration seems to be going in and out of fashion. But ultimately, we think real rates are high in a number of key EM economies, and policymakers will be responding by cutting rates irrespective of what's playing out in the rest of the world. And that gives us comfort in seeing EM as a good diversifier of portfolios at this point in the cycle.
Diana, back in June, you participated in the buy-side panel of our Emerging Markets Investment Conference here at 731 Lex at Bloomberg headquarters. And, one of the things we debated was this shift into a multipolar world where, countries have to take a position. Are they on the side of the U.S.? Are they on the side of China? Now we see China trying to expand its kind of BRICS plus model. We see the U.S. making forays to South Korea and Japan. Talk to us a little bit about those countries that don't have to pick a side. Do you believe those countries should command a premium on the part of investors?
So it's interesting that you bring that up in the context of we have the BRICS summit taking place right now. We had China announcing overnight that they're going to set up a 10 billion fund to support development in certain parts of emerging markets and to help with the supply chain integrity. I think that's a theme that's here to stay. It's a longer term theme. We're seeing countries across the board really thinking about where the supply chains are, where the key mineral resources are, and how to secure those. And so as a result of that, you've seen nearshoring, friendshoring become much more of a conversation going forward. You've seen countries moving more to ally themselves with non-traditional allies, and you've seen other players, such as the likes of India, Mexico, become quite strategically important to the likes of China as far as India goes, to Mexico, to the US as far as, you know, their manufacturing hubs and how they're setting up their supply chains. So the nearshoring is, and this multipolarity is happening in place. I think investors will actually think about diversifying their portfolios from being too exposed to either China or the US in the context of if you do have a geopolitical fragmentation. And so you start to look at the more neutral countries, India being one, that has benefited from this geopolitical splintering and actually looks set to continue to grow quite rapidly, particularly in manufacturing over the next 5 years. So those countries should command a premium as this trend continues to go forward.
You mentioned China. And, you know, that's so critical from the perspective of a foreign investor. You know, we've seen roughly $11 billion exit the Chinese equity market in the last 2.5 weeks alone. In the second quarter, we saw foreign direct investment in China, you know, down to its lowest levels pretty much on record. As a offshore foreign investor, as a U.S. dollar-based investor, how do you approach China in the current environment?
One needs to understand the policy direction of China. I think what makes it difficult to do direct investment in China is just the uncertainty as far as regulations go, the geopolitical uncertainty, and the tensions domestically. So this is an economy that looks like it's decelerating and continuing to decelerate. You have sporadic bouts of unrest coming through. And then you have flare-ups in key sectors of the economy, whether we are talking about the financial sector with the shadow banking issues we've seen this last couple of weeks, in the commercial real estate space, which is key for business, and in even domestic real estate markets, which are key for the wealth effect for the consumer. So from an equity perspective, it becomes quite difficult to look at the traditional sectors. It's not to say there aren't interesting stories bubbling underneath the surface, whether you look at tech and the leaps that China is making there on technology, etc. But from an aggregate portfolio perspective, direct investments become hard. So the second layer, then you have to think about who benefits outside China, which countries are likely to benefit. If we do end up getting the old style stimulus of let's just build a bunch of roads, buildings, let's stimulate the property sector, commodity exporters will benefit. So think about EM commodity exporters. China has now said they're reopening group tourism to Europe and the US. They'd already started that movement in Thailand, and we see that in the recovery in tourism in Thailand. So that's another proxy of thinking, you know, if we are going to get more travel, then those are places that could benefit. So there are ways to position for the China story without necessarily direct investment in China.
Diana, thanks so much for coming in. Really great to get your perspective, especially there on emerging markets. Diana Amoa of Kirkoswald Asset Management. You know, the dollar call, I think, your dollar call, I think is so interesting right now. And didn't we think the dollar was going to lose a lot of strength at the beginning of the year? And we're still at 1240 on the Bloomberg Dollar Index.
Well, it's rate differentials, it's rates differentials, it's growth differentials. I mean, as Diana rightly points out, you know, it's more, you know, U.S. growth staying resilient and the rest of the world not really cutting the chase. So, you know, I think that has something to say about it.
But it is creating a lot of interesting divergences that are certainly investable themes. And EM changes so much. I mean, think about where we were 5 years ago on EM versus today. This investment outlook is really compelling and really different.
All right. Coming up, we're going to speak with Michael Darda of Roth MKM Partners after the jobless claims that we're going to get out in just about 4 minutes. This is Bloomberg.
one of the largest and wealthiest consumer markets in the world. And there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance. I'm Matt Miller in for Tom Keene, John Farrow, Lisa Abramowitz. I've got Damian Sassower with me, as well as Gina Martin-Adams. We're about to get initial jobless claims coming across the wire. We're looking for, the survey says, 240,000 for the week through August 19th. We're going to get continuing claims as well. There, we're looking for 1,705,000 for the week through August 12th. So we're starting to get some of the numbers coming across the wire. Of course, 8:30 is when this data is due. Now we are getting it. Initial jobless claims a little bit less than anticipated, 230,000 compared to the survey of 240,000, and continuing claims at 1,702. We were looking for 1,705. So really bang in line there in terms of the continuing claims. Michael McKee, Bloomberg International Economics and Policy Correspondent, is of course in Jackson Hole getting ready for the symposium that kicks off tomorrow. Mike, what do you think about these numbers?
Well, they're going to continue to surprise the Fed because the Fed has all along thought that we would see unemployment rise along with the higher interest rates that they've put on top of the economy. And it's just not happening. Companies are holding on to workers. We are not seeing the kind of changes in the labor market that the Fed was anticipating. Now the question is, can they figure out a way to do monetary policy with a different kind of employment target? Also, just this morning, durable goods orders out down 5.2% after a 4.6% rise the month before. Ex-transportation, though, up 0.5. So I think this is probably, without having the breakdown in front of me yet, this is probably Boeing aircraft, fewer deliveries during the month. Capital goods orders, non-defense ex-air, up 0.1% after a 0.1% rise the month before. So companies still spending money, not quite as much as they were perhaps earlier in the year, but we are seeing companies still ordering. And so that is some good news for the economic growth story.
Mike, how will the Fed balance this environment where you've got still a resilient job market, but some weaknesses evident in the manufacturing sector, inflation clearly decelerating, at least in the short run? Can they sort of now start to think inflation has eased enough, growth could stay stable, but inflation has eased enough, and then move to a stable sort of policy stance? Or is that not enough of a justification? Do they actually need to see weakness in the job market evolve?
Well, that's an interesting question. They say they need to see some weakness in the job market, and of course next week we'll get the August jobs figures, and we'll see if it shows up at all. We have seen at least slower job creation, but as you point out, inflation has come down. The question is, will it keep going down? They don't know, and so they're probably thinking it's too early to say that we are done. We spoke with Jim Bullard, the former St. Louis president, just a few moments ago, and he's basically said he thinks we're still in line to get higher rates.
I think the biggest question right now is the reacceleration in the U.S. economy. Atlanta Fed's GDP now showing substantially above trend growth for the U.S. economy in the third quarter. That's following higher than expected growth in the first half of 2023, and for that matter, in the second half of 2022.
So we are watching to see what comes out of this meeting and Jay Powell's speech tomorrow morning to see if he is going to be able to balance all of these things that Gina was talking about.
Mike, you mentioned durable goods. You know me, all I care about is cars. I see durable goods orders were down 5.2%, but ex-transportation up 0.5%. What does that mean?
Well, basically, it was, as I suggested, aircraft. We see that non-defense aircraft were down 43.6% on the month. And this is what you get out of Boeing. Their planes cost so much that they have an outsized effect on durable goods. Last month, they were up 71%. This month, down 43%. You'll be happy to know, Matt, that the automakers are still working. The vehicles and parts orders were up 0.8% during the month. So it is ex-transportation, but it's really only ex-Boeing aircraft.
Got it. All right. So it's not about cars. If it's not about the cars or the Grateful Dead, then I don't care that much. Mike, thanks so much for joining us. Michael McKee there, coming to us from Jackson Hole, where he is reporting ahead of the Fed Symposium tomorrow. Of course, we're in for Tom, John, and Lisa. They're out doing some reporting at Jackson Hole as well. And there could be some really big market-moving speeches out of this symposium, or maybe not. Let's ask Michael Darda, chief economist and macro strategist at Roth MKM Partners. Michael, you know, what do you expect from the Fed in a week when a lot of people have been saying NVIDIA's maybe more important than Jay Powell's speech?
Thanks for having me on, Matt. Well, that's clearly been the case in terms of the equity market, as we've seen. All eyes are going to be on Powell tomorrow at 10 a.m. You know, last year it was very short, very blunt, very to the point, but the Fed has certainly moved quite a bit, you know, over the course of the last year and a half. So I don't think Powell's intent here is going to be to make new news. I think, you know, essentially the Fed is getting close to where it thinks the policy rate is above neutral, but their eyes are on the macro data. And you just heard Bullard there essentially saying if the data looks like it's above trend, the Fed's going to believe that the job is not quite finished. So I really don't think Powell is going to come out and make some kind of declaration that the Fed is done tightening. I think they're going to take it meeting by meeting, which is, you know, what they've been saying.
Michael, rising real yields are a negative for risk assets. Here we have the U.S. 10-year real yield approaching 10%. It's jumped something on the order of 50 bips since July. Just how much higher can real yields go from here?
Yeah, that's a really important point. They could certainly go higher with tighter Fed policy. Real rates can go up. But, you know, consider the fact that the last period in which we had 10-year real yields around 200 basis points spanning from 2003 to 2009, the forward PE ratio on the S&P 500 was right around 15. And we're back above 19 times now. We were at, you know, 20 times forward estimates earlier this year before a pullback started. So I think that ultimately is going to be a hurdle for the equity market. There is competition now from the bond market, and there's a lot of competition from cash. You know, we published a piece yesterday that took a look at the Treasury bill yield relative to the earnings yield on stocks, and T-bill yields are now higher than the earnings yield on the S&P 500. That's actually fairly rare historically, and when it has occurred, the equity market is tended to fall into fairly serious corrections or bear markets. It's going to be impossible to time, but the point is a good one. The higher the yield, the lower the PE ratio, and we have pretty elevated PE ratios now in the equity market, even on a forward-looking basis.
But this is great for, you know, Tom Keene is in a triple leveraged all cash fund, right? So he's been doing very well. This is when, Gina, Michael's going to talk about the equity risk premium or the negative equity risk premium, which, you know, it's difficult for me to get my head around that.
Right. Well, so the thing I think you want to focus on with respect to the equity risk premium is most analysts are going to look at the PE on the S&P 500 and compare that to some version of a yield or a cash yield, as Michael does in some of his notes. And I think that the missing link there is when you look at the PE of the S&P 500, you're really looking at a distorted PE based upon 7 stocks. When you look at the rest of the broader equity markets, you look at global stocks, you look at small cap stocks, you look at the X7 S&P 500, you actually find the risk premium is much closer to long-term average. But you do have these distortions, which are creating this really bizarre environment for investment. I mean, my question to Michael would be, where are we going to go with this, Michael? Are we going to see some rotation then as a default of the equity risk premium, or is this just a sell all stocks because you're selling the top 7?
Yeah, that's a really important point and a great question. I think, the answer is it really depends on how the business cycle fares from here. So we have been seeing the rally broaden out, and we're hearing the word soft landing and even Goldilocks now. Fairly frequently. And so it looks like a soft landing in the sense that the economy has slowed to about trend. Inflation is coming down, and that's starting to catalyze a lot of confidence that we'll avoid a recession. And there's no recession happening now. We know there's a recession on if the unemployment rate is lifting, and that has not occurred yet. But I don't think we're quite out of the woods in terms of looking out over the next year. I still think the probability of a recession is quite high just because we dodged one in the first half of the year. Q3 looks like it's shaping up pretty well so far. I think it's a bit premature to say, okay, the coast is clear now. So if we do end up with a recession hitting sometime between now and say the end of next summer, I think that's going to be a difficult environment for the equity market, even given the fact that we've had these distortions by the 7 stocks you mentioned. The rest of the market certainly doesn't look that expensive. But an environment where top line growth is weakening and potentially even falling, and you have that pressure on profit margins, I think we're going to have difficulty in risk assets, and not just equity markets. I mean, the high yield market looks insanely expensive here, so I wouldn't touch that with a 10-foot pole. The triple levered cash fund, Matt, that Tom's is a pretty good to go here.
He's done very well, but he's avoided Bitcoin from, I have to say, from like $600 when I first talked to him about it. He could have made a killing in it. I want to ask about, getting back to Jackson Hole, how restrictive the Fed is, because you point out that we have obviously an inverted yield curve. We're seeing a shrinkage in money supply for the first time in who knows how long, and that typically indicates a recession is coming, both of those things. On the other hand, Neil Dutta, after the minutes, put out a note pointing out something that Damien was bringing up earlier as well, which is that we have unemployment at 3.5%. We have growth that looks like 4% right now. So how restrictive can the Fed really be?
Yeah, I think that's the critical question for the Fed. If they're looking at the coincident data month by month, week by week, if the data looks like it's coming in above trend, the Fed is going to assume that whatever the policy rate is, it's not high enough, right? So that's why there's still a question about whether they raise rates again and whether they're really done. And the futures markets have been, starting to price in at least one more rate hike, although it's, low probability. So if you continue to get hot data, then the Fed is just going to keep at it, because they don't, they will admit they don't really know where the so-called R-star, the equilibrium interest rate is. If you think about what most of them have been saying, the FOMC voters, since last year, they're talking about getting to a restrictive stance and holding there. And if you ask them to define, what does that mean? It means that activity is coming in below trend. So if that's not happening, the Fed's going to keep at it until it does happen. And, in my mind, that's actually the risk to the business cycle. And, that reinforces the message of the yield curve and money and some of these longer leading indicators that tend to weaken well before recessions hit. The problem is, there are long and varied lags, and so it's impossible to time. And you can have these rip-roaring equity market rallies, even if they're narrowly driven, late in an economic cycle. We saw that in 06, 07. We also saw that 89.90. So that one was before most of our time here on the panel. It didn't happen.
Absolutely. For all of us here, definitely way before our times. Michael, thanks so much. Michael Darda there of Roth MKM talking to us about rates. If you're just joining the program, the S&P 500 is rising this morning. The futures are up 0.4%. In terms of our star and restrictive rates, I think that's going to be the big debate, right? I mean, I guess it's always a debate. Do we ever know what R star is?
No, well, I mean, look, taking a step back, we had that claims data came out. For me, it's just more of the same, right? We have had 31 positive payroll prints going back to December of 2020. We're going to get a 32nd. It's going to keep on going. And so for me, if you're just looking ahead of the next Fed meeting, there are only two data points that matter: payrolls next week and then CPI in mid-month. That's kind of what we're going to be focused on.
Yeah, and that's what I was trying to get out of Mike is, can the Fed pause with the job market still fairly stable? Yeah. Can they just lean on that inflation, the disinflation trend more? I don't know. This is a key question because they continually point to the job market as unusually strong, and all the data suggests it's going to remain unusually strong.
And it's an election year.
Yeah, well, that doesn't play any role in what the Fed does. Coming up, Jane Harmon, chair of the Commission on National Defense Strategy.
Sports and money, they've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. European Central Bank President Christine Lagarde sits down with Bloomberg's Tom Keene for a conversation on the political economics of Europe and the permanent shifts in the global economy. Tune in for the exclusive interview live at 4 p.m. Eastern from Jackson Hole, only on Bloomberg.
Putin's Russia behaves as a thug state where laws don't work, where everyone can be killed, poisoned or blown up. And it's plausible that Putin will continue cleansing from any alternative voice, and Russia will become fully a totalitarian state with a cult of Putin. It's not a mistake or accident for sure. It's a direct blow of Prigozhin.
Svetlana Tsikhanouskaya there, the Belarus opposition leader, speaking with Bloomberg's Maria Tadeo earlier this morning. Jane Harmon, chair of the Commission on the National Defense Strategy, joins us now to talk about what this means for Russia, what this means for Ukraine and the world. So great to have you on the program. We really appreciate you joining us this morning at such short notice. Can I ask first what this means for the Wagner Group? I mean, my initial thought was they're the only soldiers that seem to be making a difference for Russia in its war on Ukraine. And now with the head cut off the snake, so to speak, it seems that they would be fairly useless.
I think that's right. What happened to Prigozhin was obviously predictable. When it would happen wasn't. But it reminds me of the end of the movie Casablanca, where the police chief says, "I'm shocked. Round up the usual suspects." At any rate, he's gone. He was the motivator for them, and I think the trainer and leader of them. They were required, so I understand, it was reported, to sign some oath of allegiance to Putin, which was why Prigozhin led that mini whatever in the first place, mini mutiny in the first place, because he realized that his body was being cut off from the head of the snake. And now it surprises me that he would have flown in an airplane identified with him out of the Moscow airport. I mean, seems very careless. So I don't really get that. But I think the mutiny of that group is over. Will something else happen? Perhaps, because Putin is weakened by this. That mini mutiny got very close to Russia. He handled it in a bizarre fashion. He basically did nothing for about a month and tried to figure out what was next. He's also now been indicted for war crimes and could not go to the BRICS meeting, this meeting of Brazil, Russia, India, China, and South Africa. In South Africa a few days ago, had to send a video in. And what I learned from that is that he's caged. So I'm not sure he gets stronger. Your commentator said he will get stronger. I'm not sure he personally will get stronger. That doesn't mean that democracy will rise up in Russia anytime soon.
Jane, I wonder if you could just talk to us about the Siloviki, Putin's inner circle, Gerasimov, Lavrov, the rest of them. What does Prigozhin's death mean for them? Is this just a part of doing the job in Russia?
Yes. Is it business as usual? Yes, but he plays people off against other people. He was tolerating Prigozhin because I think he was pretty anxious that his inner military circle, especially Shoigu, weren't getting the job done, and they weren't getting the job done in Ukraine. I don't know who he's going to use to play off against whom, but I do think that will continue to happen, and I do think all of them have to worry. If we could just focus on Ukraine for a moment, there's a lot of news coverage that the war is not going well for Ukraine. Well, how about this? Russia is still blockading Ukraine grain going to Africa. Putin's video at the BRICS conference said, well, it's Ukraine's fault, not our fault. Yeah, right. That is, the Black Sea is open waters, and it's bordered by 3 NATO countries. Maybe it's time for NATO to institute a no-fly zone over the Black Sea and let that grain move on Ukrainian vessels. I think that would send a strong message to Russia when Putin is weakened, and perhaps that would hasten, one would hope, some retreat from this ridiculous, illegal, and cruel war he's waging.
Bring this home for us, if you would, Jane, and talk about the implications that this may have on the dynamics of support inside of Washington. Obviously, we just had the presidential debate, the Republican debate last night. It was certainly mentioned in foreign policy as a hot topic, but how might this impact what's happening among policymakers here at home?
Well, there's no love lost in Congress for Putin. Perhaps former President Trump still likes the guy, but his fortunes seem to be flagging a bit. And perhaps Putin is trying to outlast the 2024 election in the U.S., hoping that Trump will come back. But Congress is of a mixed mind. You heard that about half the people on the stage, especially Vice President Pence and Nikki Haley, were vocal in support for continued aid to Ukraine, as I am, and I think as most Democrats are. And the DOD is front-loading some of the additional costs for weapons and support trying to front-load it into the next budget plus a supplemental. So hopefully Congress will approve that. Remember, there is support, strong support by Mitch McConnell, the Republican leader in the Senate, and I haven't heard Kevin McCarthy's latest version of this. And we could be heading for a shutdown, unfortunately, at the end of September. But I'm betting that Congress keeps funding the war, and I think Congress should keep funding the war. And I think that the future of peace in the West is at stake if we don't stop Russia.
Jane, Wagner is very well represented in the Sahel region. I'm talking Central African Republic, Sudan, Libya, Syria. What does Prigozhin's death mean? What kind of void does this leave for these countries?
Well, it leaves a void. I mean, he was the leader of a very profitable and probably very corrupt mercenary group in Africa. I don't sense, or I haven't heard about his deputy moving in to fill the role. And again, I think Putin wields pretty long tentacles, and somebody might be afraid of crossing Putin, assuming it's another Russian. And these are mostly Russian mercenaries. Perhaps some other group will fill the void, but it does say to some in Africa who were dependent on this mercenary group that they better watch out, that protection has maybe been removed.
All right, Jane, great to get your thoughts this morning. And again, we really appreciate your insight. I don't think there's anyone we could have gone to with a better idea of what's going on. Jane Harman there, the Commission on the National Defense Strategy. Appreciate your time. Now, while we were speaking, we saw a red-hot, sticky headline cross the Bloomberg terminal that the Turkish lira has extended its rally against the U.S. dollar to more than 6%. This after the Turkish central bank raised interest rates far more than expected. The currency was trading, is trading, I should say, at about 25.5 for a dollar, which to me is an astronomically weak level. You know, I mean, last time I was in Turkey, I was buying like 5 or 6 lira for a dollar. But Damien, talk to us about what's going on here and where we are now in their fight against inflation.
Well, I mean, it's very clear. I mean, the lira, I mean, basically they have negative FX reserves there. So they really can't support the currency the way they used to. I'm talking about the central bank. But what's most interesting to me is that when people talk about declines in the lira or gains in the lira, they forget about yields in Turkey, which are astronomical. So on a total return basis, when you're investing in a place like Turkey, yeah, okay, the currency might be off 25, 30, 40% even on a given year, but those yields should, in theory, compensate you for that. And we've seen a bit of that. I think on a total return basis, the lira is down this year, but not by as much as people would otherwise think.
I think from an equity perspective, it's just one of these places where investors really struggle to put capital because there is such instability in the currency.
People would otherwise think.
I think from an equity perspective, it's just one of these places where investors really struggle to put capital because there is such instability in the currency, because yields are all over the place. The capital generally tends to concentrate in areas of certainty in relative terms in the equity market, and that makes this area, this region of the world, really difficult to invest in, even though the economic trends could generally benefit this space. As you see deglobalization, you see diversified supply chains play out, some of Eastern Europe should be beneficiaries. But it's been really tough to attract capital given that instability.
Well, I mean, you're making a great point from the perspective of a foreign investor, but if you're a domestic investor inside of Turkey, there's no other place to go except the equity market if you want to basically, if you want to invest. So,
but I assume I mean, they must be using euros or dollars rather than the lira.
Yeah.
It's so sad because it's such a beautiful country. I was lucky enough to spend a month there when I was a kid with Kevin Charles Lawrence Morin, my English professor, who took us all over for a great trip to Roberts College and around the borders. So tough time there, but at least they're getting a little bit of strength against the dollar today. It's been great hanging out with both of you today. Thank you so much for joining us, Gina Martin Adams and Damian Sassower. Coming up on Bloomberg Television and Radio, Republican presidential candidate Nikki Haley following last night's debate. This is Bloomberg.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI,
you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
This is Bloomberg.
From New York City, for our viewers worldwide, I'm Alex Steele in for Jonathan Farrow. You got big tech leading any rally in stocks. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Coming up, big tech getting a big boost from NVIDIA's blowout results. And investors bracing for Jackson Hole with Chair Powell now on deck as Republicans target President Biden and the economy in Wisconsin. Let's begin with the big issue, the biggest earnings event of the year.
When you look at NVIDIA.
What we're seeing in NVIDIA is obviously very good news.
There's really nothing bad about that report. They just completely surprised the market.
It's kind of a nice relief for a lot of investors.
Affecting the behavior of investors on a more of a risk-on mood from what we've seen in the past few weeks.
It's a very exciting story, a very exciting stock.
We're particularly impressed by the strength in data center.
They have a very dominant position in the data center. Could the stock double? Of course it could.
We'd like to see another 15% move in the price.
The macro landscape is very favorable.
What NVIDIA is being very quite clear on is the demand will last into the foreseeable future.
I think you're going to see definitely a spillover effect.
Optimism in the AI theme again.
This wave around AI is not going to slow.
All right, let's get down to it. BNP's Megan Robeson joins us and Eric Nielsen of Wells Fargo. Guys, let's talk about this. Eric, do you have to chase this NVIDIA AI rally again? Do you have to chase the tech rally again?
Yeah, well, Alex, so our equity strategy team is still relatively positive on equities here. And part of that story is we see a little bit more downside in the rates complex, really across the U.S. in the near term. That, of course, tends to lift some of these more growth, duration-fueled stocks. So I think it sort of makes sense to see some of these trends continue. The question for us is, what is the 6 to 12 month horizon here for the Fed? What's priced into earnings here? As we get into next year, economics team still calling for a recession, and Fed rate cuts. And the question is, if we see more downside in rates, why is that happening? If that's not a great thing, then perhaps it's not so equity positive.
Okay, fair enough. So let's hold that there to a second. Go to Megan. Do you agree, Megan, that the path of least resistance for rates is actually lower? We actually have an assumption that rates will stay higher for longer. So heading into Jackson Hole, we're not expecting a major policy shift out of the Fed. We do think they could discuss a higher neutral rate. If they do so, our economists expect that would be implemented by holding rates higher for longer here, and so well into 2024. If you look at credit markets, we are pricing in very low risks related to that. So we've rallied to the tights of the year at the end of July and now have bounced off of that a bit, but not much in the way of pricing expectations of higher rates. We're going to delve deeper into Jackson Hole in just a second. But Eric, if we do wind up having, though, higher for longer, how does that affect tech? Because there was a conversation earlier this week that NVIDIA was actually leading the rates volatility rather than the other way around.
Yeah, certainly the higher for longer narrative would be a risk to our equity strategy team's view. And also it's a question of, I think, what's driving the rates higher move? Because if it's growth being stronger than expected and that continues to kind of support the earnings narrative, and it's not necessarily the worst thing in the world. So a lot will hinge on the Fed's communication and what its actual eventual action will be into the end of the year.
Okay, what sets us up before we go to Jackson Hole is the sentiment. Real quick, guys. Megan, what's the sentiment right now in the market as we do head into Jackson Hole? So credit sentiment has been generally positive, and you've seen that in investor positioning. So our BNP credit positioning indicator is now at the longest level since pre-COVID. So as growth has surprised to the upside, we have seen investors add to risk, and that appetite has increased. So I think there is sort of cautious optimism heading into the symposium. For the market, what do you think, Eric? Is the sentiment a little bit too bullish now as we head in there because of NVIDIA? How's it set up?
Well, we've certainly seen a trend this year, Alex, of the divergence between a couple of big names and the overall index as a whole. Thinking about Jackson Hole, and I'm sure we'll get into this in more detail in the next few minutes here, but I think there's some anticipation that Powell will talk about maybe higher structural rates, higher R-star, and if he doesn't do that, we're still in the summer doldrums. You could still well see some further risk on here to the extent that he kind of delivers a very ho-hum speech. Maybe he talks about something completely unrelated to the stance of policy, and it's a little bit more wonky. Certainly wouldn't be the first time. So I'm not necessarily sure that there's a clear downside risk here for risk sentiment.
So let's get to it. You both want to talk about it. We're going to do it. Jackson Hole officially kicking off today. Bloomberg's Michael McKee caught up with Jim Bullard, former St. Louis Fed president, earlier today.
There's some talk about base effects fading and going the other way during the second half of the year. I like to look at the 12-month numbers because they rinse out some of the seasonal effects. And so you could get at least a pause in the disinflation or even a little bit of reacceleration. I think that would suggest a higher rate profile for the Fed than otherwise.
Joining us now, Michael McKee from Wyoming. Hey, Mike, good to see you without the hat, which is weird, but let's talk about what people are talking about on the ground. What's going to be the topic? You got R-star, structurally higher rates, you have term premiums. There's a lot of stuff to get into. There's inflation and there's labor. What's the buzz?
I think basically what you're going to hear Jay Powell talk about is business as usual. They're going to continue monitoring the data that come in and decide on a meeting-by-meeting basis whether they need to tighten policy. Jim Bullard was the highest dot before he left the Fed, and he's still obviously quite hawkish about the whole thing. And he does make the case that the economy is much stronger than the Fed had anticipated. But it doesn't do Powell and the Fed any good to send the markets in one direction or another at this point, which is why I don't think they'll talk about many of the things that are being speculated on, like R-star, because any kind of suggestion that policy might change is going to lead to a belief on Wall Street that it will change, and people will start repositioning themselves. So he's probably going to just tell people what they have been hearing all along, that we're going to continue to keep rates high into 2024, and we're going to keep watching inflation and make sure it continues to fall towards 2%, and we'll make decisions as the meetings come along.
do no harm, right? Like, don't actually send any signal whatsoever, Mike. Thanks a lot. Appreciate it. That coming up tomorrow at 10 a.m. Megan and Eric still with me here. Megan, if we do, though, get higher structural rates for longer, when are we going to see that real deterioration then in the economy? And in your world in credit, like, where do those cracks emerge the most?
So, Alex, we've started to see some preliminary cracks emerge. It's just happened in the last few months, and the first places have been in the most rate-sensitive parts of the market. So, not surprisingly, leveraged loan defaults have creeped gradually higher. On a high-frequency basis, the three-month default rate for loans is annualizing close to 5%, so signaling that we are heading in the direction of a default cycle. You've also seen small and medium-sized firm bankruptcies, not necessarily with public credit, but you have seen bankruptcies there also climb higher. I think for the rest of the market, we are getting to the point where now interest expense is above earnings, and at a level where, as maturities come due, you will start to see it start to impact areas outside of that most floating rate sensitive areas.
Yeah, just still waiting for it, though. You would have thought we already would have seen it. Eric, in terms of that point, if we do see higher for longer, and we get that message again, kind of do no harm from Powell, where's the biggest misprice right now in the market?
Well, Alex, I think the narrative that the lags from policy have become shorter is maybe a little bit of a sort of ex-post rationalization of not having seen a recession yet. I think those lags still work. They still take a long time. There's also still a psychological element of people expecting the Fed to pivot, and it's just not happening. So there is a clock running here with higher rates. It is having an effect, as Megan highlighted, in some of the default rates. So I think it's a broad macro story. I'm not sure it's necessarily one corner or another. It's another 6 months of Feds keeping policy on hold here is a change.
Well, let me flip it then for tomorrow. So, Eric, we've seen the dollar index over its 200-day moving average, a really strong move. And I'm wondering if we get a Powell that isn't as hawkish or isn't as toe the line as we think, is there some real potential downside there?
Maybe from a very tactical standpoint for a week or two, because it's summer and we can see some return of some of these high beta carry trades in FX, dollar selling, but the growth story in the U.S. is still the most compelling one out there. China is obviously headed the wrong direction. Europe increasingly is on the cusp of recession. The U.S. is hanging in there. So to us, the dollar is still a buy on dips, and we really want to emphasize that to our clients.
So the PMIs didn't scare you yesterday, I guess?
Well, the U.S. the PMIs, I love the ISM a lot more because the PMIs were telling us in September, October that the U.S. is in recession of last year, and I think that was probably not the case.
All right, Megan, sort of a similar question to you, sort of the biggest misprice in your market, and I appreciate that you still see higher for longer. Where's the misprice, though, if we don't get that message tomorrow?
So I think the most mispriced thing in our market and credit markets is the compression that we've seen. So we have seen beta rally over the course of the summer. So lower quality, whether that's triple C's or high yield compressing versus investment grade. So the lower quality part of the market has seen earnings growth slow at a faster pace than higher quality. And as that continues and we sort of lose economic momentum, the PMIs that you cited as a signal for that, we would expect decompression across credit valuations.
Just in terms of today, the 30-year TIPS auction, should I be buying that, Megan? What do you think?
I think that real yields have risen a lot, so I think there is an attractive yield to be had there. And so far for credit, we've performed very well amidst kind of surprising rise in rates over the course of the summer. I think that fixed income traditional does also provide attractive carry relative to credit, and it goes along with what we were just talking about in terms of spreads being very compressed.
Yeah, looking at the 2-year sitting at 5, just straight up 5%. All right, Megan Robson and Eric Nielsen, you are sticking with us. Joining us now with a look at the stocks moving ahead of the opening bell. Here's Abigail Doolittle. Abby?
Hey, Alex. Well, naturally, we will be starting out with NVIDIA, which is absolutely soaring, poised for a new record high on the open. This, of course, on yet another blowout quarter. They put up about $13.5 billion in revenue, up 88% from the second quarter, beating the estimate that was a 50% rise in the last quarter. And there's also a strong guide guide for this current quarter of about $16 billion. That is up 170% year over year. A big number. Helps to explain why the stock right now and on the open will be up more than 220% year to date. Snowflake, also a beat, a smaller company, of course, but a software company. They held the guidance. Some analysts are excited about that. And then Tesla, this is interesting, Alex. After dropping from its July peak by about 29%, we're now poised for a fourth up day in a row. Elon Musk is out there saying the Cybertruck is Tesla's best product yet. Over the last 4 days, including today on the open, Tesla will be up about 10%, a little stealth rally there for Tesla.
That tech sentiment, if you can call Tesla a tech stock, I don't really know if that's true. Abigail, thanks a lot. I really appreciate it. Coming up, a GOP hopeful squaring off in Wisconsin.
The debate last night didn't really do anything to undermine President Trump's very secure position as frontrunner. This is sort of an introduction for those voters who might be other Trump curious, if you will, those sort of sometime Trumpers or never Trumpers who are looking for an alternative.
Republicans targeting President Biden and the economy in Milwaukee. That conversation up next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Bidenomics.
Joe Biden has weakened America.
We must reverse Bidenomics. The loss of $10,000 of spending power for the average family.
The war on energy.
Unlock American energy. Drill, frack, burn coal, embrace nuclear.
Runaway spending that launched the worst inflation in 40 years.
Reform the U.S. Fed. Stabilize the U.S. dollar.
We've got to deal with the long-term national debt issues.
It's time for an accountant in the White House.
GOP candidates making their debut in Milwaukee, taking shots at President Biden and his economic policies while leaving Donald Trump relatively unscathed. The GOP frontrunner making his own news in the pre-recorded interview airing at the same time.
I just felt it would be more appropriate not to do the debate. I don't think it's right to do it. If you're leading by 50, 60, I have one problem leading by 70 points, and I'm saying, why am I doing it? And I'm going to have 8 people, 10 people, whoever made the debate, I don't know how many it is, but I'm going to have all these people screaming at me, shouting questions at me, all of which I love answering, I love doing, but it doesn't make sense to do them. So I've taken a pass.
Bloomberg's Anne-Marie Hordern joins us now. Hey, Anne-Marie, what's the scuttle here? Who won this debate?
Well, it's a great question. There's really two people who everyone's talking about this morning as you flip through a lot of the networks and read a lot of the opinion pieces, especially coming out of the Wall Street Journal editorial board. I thought theirs was very interesting. One is that Vivek Ramaswamy seems that his personality, he seems to be one of the most Googled people today. He is someone who's not very well known to the establishment, but he did come up against some very difficult debates when it comes to foreign policy, especially against Nikki Haley. And she's the other one that everyone is really talking about this morning. Wall Street Journal editorial board calling her a pleasant surprise. We'll actually be speaking to her in the next hour. She had a lot to say about foreign policy and the economy, really walking a fine line, but giving the blows where she had to.
Yeah, it was very, and also what I found interesting too, talking about Biden economics, she also came out against fiscal discipline, for fiscal discipline, but also blamed the GOP for massive spending as well. Yeah. I usually don't hear that in a GOP debate.
Yeah, exactly. She was one of the few on the stage, or the only one on the stage, who also blamed the Trump administration, who VP Mike Pence, of course, was part of. And this is what she said. The truth is that Biden didn't do this to us. Our Republicans did this to us, too, when they passed the $2.2 trillion COVID stimulus bill. And she talked about the trillions of dollars Trump has added to the deficit. And she said it was all these other people on stage who have been in Congress as well, who have been voting to add to that deficit. So she came out with a lot of punches across the board in a number of places. And she's someone people weren't really expecting from. Everyone thought really this would be a potential make or break for DeSantis. Yeah. It just seems that it was kind of mute. You know, he wasn't trashed, yeah, but at the same time, he didn't really shine the way some others did.
Okay, before I let you go, Vivek Ramaswamy, is he running for president or the bottom of the ticket?
Well, let's see at the moment. At the moment, he says he is running for president. He says that he cannot wait to be in the White House and lead. It's interesting to see where he comes out on this. You would think maybe he is running for VP if Trump does become the nominee, because he said yesterday that Trump is the greatest president we've seen in the 21st century.
Yeah, that was coming up to my mind, too. All right, Emery, thanks a lot. Emery Hardern. And coming up, as she was mentioning, 10:30 a.m. Eastern, Republican presidential candidate Nikki Haley joins Emery and Joe Matthew. Megan Robson and Eric Nielsen are still with us. Hey, guys, let's get to the whole idea of Biden economics. Megan, just pretend that Biden economics gets rolled back to some extent. What does that do to the economy?
So in terms of the economy, Biden economics, you know, credit volatility has been very low. Part of that has been policy risk has really been in the background outside of monetary policy. So there has been deficit spending going on in the background. We think that has been a major factor in supporting GDP growth this year. As the election cycle comes into view, we are expecting that you could see more debate around that, and it will be a major factor in our GDP forecast. It's also going to be very important in terms of sectors. So typically in a political season, you'll see discussion around regulation of energy, financials, and tax policy. So those are all risks that we'll be watching in the year ahead.
What I also find so interesting is that a lot of red states are going to be benefiting from things like the IRA, as like solar panel building gets done there. And I'm wondering how that's really going to play out. Eric, to that point, if we roll back some kind of Biden economics, where do we feel that in the market? What's the impact?
Yeah, Alex, you bring up a great point about the IRA, and some of this is really hard to undo, to start rolling back some of these initiatives that are already taking hold. And let's be honest, you know, the debate stage is very different from what happens in practice once someone's in the seat. Austerity rarely proves popular. It certainly didn't prove very popular in the 2010s. And it does feel as though there has been a bit of a structural shift in how some of these candidates and these parties are thinking about spending. So, you know, if there is real austerity, that's surely one way to reduce inflation. But I'm a little skeptical that we're going to see a shift back to the 2010s austerity.
Well, sure. I mean, they're obviously very different. A different way, I guess, of asking that, and Megan, maybe this is for you, because you do see those higher rates. Are we going to see structurally higher inflation because of this kind of long-term spending, right? Like it's going to come off over the next 5 to 10 years, even if some of it sticks.
So we do expect that inflation will be, I think, stickier than people expect. But given our forecast that the Fed does hold for an extended period of time, we do think the Fed will eventually reach their goal. It's just going to take a lot longer than people have baked in. So, you know, well into 2024, as we see inflation start to come down. I think for us, we're really focused on that trajectory and how that feeds into earnings. So people are forecasting an improvement in earnings into next year, which definitely goes against this whole goal of bringing down inflation and some of the deceleration that we've seen.
Yeah. Eric, what do you think? Structurally higher inflation at some point?
Yeah, look, a lot of these arguments, Alex, make sense to me. I mean, whether it's the building out of green infrastructure, the tailwinds from IRA and labor demand, certainly some other factors at play here. But some of the factors like structural, technological improvements, these things haven't really changed. A lot of the friend-shoring, reshoring narrative is mostly just a narrative. It's hard to see that in the data so far. So I'm not fully convinced, but at least for the next 2 to 3 years, it's hard to get the genie back in the bottle. And I think you're looking at least more inflation volatility, perhaps around a higher average as opposed to a quick return to 2%.
Well, that's a really more inflation volatility. That's a good one. All right, guys, thanks a lot. Really appreciate it. It was fun to catch up with you, Megan Robson and Eric Nelson. Thank you very much. Coming up, the morning calls, and later, NVIDIA providing the latest fuel for the equity rally. We're going to dig through the results with Dan Ives of Wedbush. Plus, looking ahead to Chair Powell and hit with Clear Harbor's Aaron Kennan. That is also coming up. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is the Countdown to the Open. I'm Alex Steele in for John Farrow. Time now for morning calls. A look at some of the top analyst recommendations on Wall Street this morning. First up, Bernstein downgrading Estee Lauder to market perform, seeing a challenging macro environment and headwinds to growth. Next up, Wolfe Research upgrading Discover Financial to outperform, saying recent declines have created an attractive buying opportunity. And finally, NVIDIA, the only remaining bear, throwing in the towel. Morningstar upgrading shares to hold following its blowout results. Just how much more upside can we really have in the stock? All right, coming up, it is the godfather of AI delivering in home run fashion. That is a quote from Dan Ives of Wedbush. I know this is a shocker. He's bullish on tech. More with him next at the opening bell. This is Bloomberg.
Connection lost.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed
Happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is the Countdown to the Open. I'm Alex Steele in for Jonathan Farrow. So we're moments away from the start of trading. Let's look at how we're set up here. The NASDAQ 100 futures are up by about 0.9%. It is definitely going to be a tech rally today led by NVIDIA, but small caps are trading a little bit heavy, which leads me to other asset classes. So switch up the boards here. You hear the opening bell there for the equity market. If you flip up the boards, though, you can see what's happening with euro dollar. So overall, a stronger dollar. How much can that continue? Except when it comes to the lira. The lira sort of really jumping higher here as the Turkish central bank surprised with a very strong rate hike. Also, yields are trading higher, particularly in the front end. You got the 2-year up by about 5 basis points. You can wonder if that's going to eventually put some pressure on tech, or if the NVIDIA story can really outweigh that. And commodities trading a little heavier, of course, because you got the stronger dollar. Again, are we overextended, though, going into Jackson Hole when it comes to the currency? So let's get to the main story. You got NVIDIA. That's going to really lead and dictate the market for the short term. Shares hitting a fresh record high on the back of those blowout results and stronger than expected outlook. The CEO saying a new computing era has begun. The race is on to adopt generative AI. Bloomberg's Ed Ludlow joining us now from San Francisco with more. Hey, Ed, what do you make?
Good morning, Alex. Well, NVIDIA's opened up more than 4%, not the same level of gains that we saw in after hours and pre-market, and just shy of $500 a share, now $490 a share. But if these gains hold, we will hit a fresh record on this stock. This was the third consecutive quarter where the sales forecast given by NVIDIA came in way above analyst expectations. What they're saying for the fiscal third quarter is sales will be $16 billion plus or minus 2%. I think most analysts were expecting around 12.5% figure. In the fiscal second quarter just gone, data center sales coming in above $10.3 billion. The average analyst estimate was $7.98 billion. The growth is coming from the United States when it comes to data center. HGX, which is largely server designs, including H100 and A100, are doing well there. But it was interesting to note that at this time, China still accounts for restrictions on technology to China. In the first instance are adjusted, there won't be an immediate impact. But long term, what they said is if there is a long-term restriction on technology exports to China, it will be, quote, a lost opportunity for US chip makers in what is, frankly, the world's most important electronics market.
Ed, good stuff. Thank you very much, Ed Ludlow, joining us. Let's turn to some other movers here in the retail sector. It's really confusing. Guess topping the earnings estimates and boosting its full-year outlook. The CEO quote saying, "Our strong performance gives us confidence to deliver in the second half of the year. We're committed to managing our capital efficiently and expect to generate strong cash flows." Bloomberg's Abigail Doodle joins us now with more. I gotta say, I did not expect this from Guess, and Dollar Tree not doing as well.
It's interesting. Such a mixed bag, no pun intended, for retail this quarter. It's hard to make heads or tails of the broader trends because we have companies that are doing really well, like Guess, and I agree with you. I would not have guessed this at all. Again, no pun intended, given the fact that the stock was into today down more than 11% on sort of lackluster performance. But they put up basically a blowout quarter, strong right across the board. Sales, gross margin, and earnings all came ahead of consensus. Earnings beating by 82%. And it's not a tiny number either, Alex. Up 72 cents per share in adjusted earnings. And again, Asia strength, licensing for its European units. And at least some analysts, Jefferies in particular, thinks that the Asia strength could go ahead. I will note one thing though, Alex, there is a 26% bearish short interest on this stock. So some of this move today, it could be a short squeeze.
Okay, fair enough. Really good context with that. Abigail, thank you very much. Although their commentary was still pretty good. All right, switching gears to the materials sector, we're following U.S. Steel. The stock is falling for a second day as another potential buyer backs away. So the CEO is saying that Esmark respects the position of the United Steelworkers and maintains a solid relationship with the organization and the leadership. That's, of course, from one of the bidders coming in for U.S. Steel is now walking away. Isabel Lee joins us with more. Isabel?
Hi, Alex. This is really an interesting story because Esmark is indeed not pursuing a takeover of U.S. Steel. The reason? To respect the rival bid of Cleveland-Cliffs. So Cliffs offered a takeover of around $7 billion, which U.S. Steel rejected. U.S. shares are now down by slightly 1%. It paired earlier losses. On Wednesday, it closed 2.2%, which is lower than the 35 per share proposal of Cliffs and Esmark. So the drama began on August 13 when U.S. Steel revealed it was reviewing proposals. And then hours later, we had Cliffs disclosing a takeover, and a day later, we have Esmark saying it will announce an all-cash proposal. But as we know, both those aren't panning out. And what's interesting here is Cliffs has the backing of a powerful labor union, and this labor union represents many of the workers at U.S. Steel. And now we know that based on a contract, the seal of approval of the labor is important and vital for the eventual suitor of U.S. Steel. Shares are now trading around, let's see, 1.5% lower, but year to date, it's up around 23%, Alex.
Isabel, thanks a lot. Isabel Lee joining us there. And finally got Boeing reporting an issue affecting its 737 MAX jet, raising concerns about its delivery target. I feel like we've heard this story before. The company writing, quote, "During factory inspections, we identified fastener holes that didn't conform to our specifications in the aft pressure bulkhead on certain 737 airplanes." Bloomberg's Simone Foxman joins us now with more. Simone?
Yeah, another story we've heard before is problems with Boeing's largest supplier, Spirit AeroSystems, and that apparently where these issues are coming from. This adds to challenges for Boeing in trying to get back to its 38 jets per month pre-COVID level target that it wants to produce. It's been trying to ramp up 737 production to that. JP Morgan and Jefferies analysts both believe that it will take the company a bit longer to reach this pace. Now, the good news is the FAA says this is not a safety hazard, but this is really offsetting some positive news that we also heard after hours yesterday, that Qantas was ordering 12 Boeing 787 Dreamliners. That's doubling the number that it has. A report by Air Current, though, saying that this could potentially affect hundreds of misplaced holes, duplicate holes. So we'll try and get more information on exactly how long it will take for the company to address this problem, but shares now down 3.5%.
Simone, thanks a lot. Simone Foxman joining us there. Let's turn back to the stock of the day, and that's NVIDIA. So shares did hit a record high after earnings, but as Ed was pointing out, we're kind of rolling over here from that high. Dan Ives over at Wedbush writing, quote, "NVIDIA's guidance and commentary was a drop the mic levels. This AI demand story is as real as any tech trend we've seen in the last 30 years, only comparable to the internet in 1995 and Apple's iPhone launch in 2007. Dan Ives of Wedbush joins us now with more. Dan, first, can we just go to the price action today? What does it tell you if it's sort of a buy the pre, sell the post? I mean, if we don't hold on to these record high levels, does that tell you anything about the short-term direction of the stock?
Oh, yeah, I just think this is knee-jerk. I mean, this is just the start. The appetizer
in terms of where I think the stock's going. I mean, this was a historic guidance that we saw from the godfather of AI, Jensen, NVIDIA. And I think it just shows this tidal wave of spending is not even in the first inning, and it's in the dugout.
I hear you. And my joke in the morning meeting today was like, Dan Ives is bullish on tech? Because you're always really bullish on certain tech names, right, Dan? And I'm wondering, how do we know this is just not a cyclical part of the tech industry? It's just a different kind of cyclicality. How do we know that?
Yeah, it's a great question. I can just tell you, in the last 30 years, we've never, not even within miles, have seen guidance raises of this level for a company the size of NVIDIA. And I think what that just shows, it's $1 trillion of spending coming around the corner. And we think it's the biggest transformational tech theme since internet in 1995, maybe you could say 2007 iPhone. And now it's the second, third, fourth derivatives of AI. The front lines in NVIDIA, that's the godfather.
I hear you, but how do we know that it's going to be a continuous kind of build out? It's not a lot of like upfront spend, and then maybe we have some recurring revenue, but it's not going to be continuous and upgraded. We don't really know that though.
Yeah, and that's why we've spent the last, call it 9 months on the road, in terms of trying to figure out around the world where these budgets are going. We think going into next year, it could be 8 to 10% of budgets, AI, from less than 1% today.
Wow.
And that's why as a tech team at Wedbush, we've just been pounding the table across semis, across chips, across internet, and because I think it's really the start of a new tech bull market. I think the bears, they came out of hibernation mode, those beaten down bears last few weeks. I think now they go back into those caves.
What did you make of the buyback? So typically when a large tech company does a large buyback, the conversation is, ooh, they see no other investment opportunity. What do you think of that?
I think they're just in a position of strength. I mean, they're generating more cash in some countries over the coming years. This was a smart move. Strategically, I think from a board perspective on the buyback side, they still could do M&A as well. But I think it's something investors wanted to see. And you just go take a step back. I mean, this is probably more pressure than I've seen on any earnings call in the last 15, 20 years. And they delivered home run fashion.
All right, Dan, if I haven't bought NVIDIA yet, do I need to wait or do I need to chase?
I mean, I think this is an easy buy today. I mean, that's sort of our view. I mean, you could be looking at name 1.5, 2 trillion in terms of where it goes. But derivative plays, for those that maybe you feel like they missed it, the second, third, fourth derivatives, names like MongoDB, Palantir, Microsoft, Google, among others, AMD, and what Lisa Sue are doing. I mean, this is going to be, I think, the next 3 to 5 years, something unlike we have ever seen in tech.
Dan, love it. Thanks a lot. Really appreciate it. Also like that shirt. Dan Ives over at Wedbush. Thank you very much. All right, let's continue the conversation now. We got Clear Harbor's Aaron Kennan. He joins us. Hey, Aaron, if you haven't bought NVIDIA, if you haven't bought into the AI trade, are you chasing it today?
Well, I think it's a longer-term trend, as Dan outlined, that has really commenced, over the last many years, and it's just accelerating with this generative AI movement, and NVIDIA is at the epicenter of it. And so we have exposure directly and indirectly here at Clear Harbor to the AI trends, and as Dan suggested, it's not just an NVIDIA story. It's a software story. It's a hardware story. It's about ultimately increasing productivity at the work level, and it has repercussions at a macroeconomic level around things like GDP. So we're certainly very focused on it.
What is the risk to it? So if you were in NVIDIA, or if you need to chase it, or it has such a pivotal moment in the tech industry, where's the risk and how do you manage that?
Well, I think NVIDIA is cheaper today on a multiple of future estimated earnings than it was even a year ago, even though the stock price has rallied significantly. With that said, I'm not beating the drum on NVIDIA per se, but I'm just making the argument that we have to keep our eye on the earnings side and the expected earnings side of this trend. And certainly, if you look at the forward multiple of the S&P 500, with estimated earnings this year at $222 for the S&P, that's over 20 times. One could argue that the market certainly is not attractively priced right now, but one could also argue that we're overweight things within the growthier parts of the economy within the S&P like we haven't been for many years or perhaps forever. And so that higher multiple can be somewhat justified.
Do you think that it can reignite animal spirits in the equity market? As in, if the window for a sell-off in stocks is closing, do you have to play catch-up? Like NVIDIA supporting S&P enough that you have to then play catch-up to that?
Well, Alex, I think if you look at just year to date, the broad S&P 500 equal weighted is only up just over 5% on a year to date basis, and the S&P is up 17%, with the NASDAQ up, I don't know, 31% maybe as of the open this morning. And so the rally has been led not just by NVIDIA, but by large mega cap companies that are proving that they, even as they approach 500 billion market cap, 1 trillion market cap in the case of NVIDIA, that they can continue to grow. We are cautioned by the reality, though, that the broad market has not really rallied significantly this year. The Dow's up mid-single digits. As I say, if you look at the value line index, it's up about 5%. That's very lackluster when you then pivot and look at the growthier names through the NASDAQ index prism.
Yeah, fair enough. Sort of a dose of reality to that hype. We're going to get more into that. Aaron Kennan is sticking with us. So coming up, retailers under pressure as consumers start to feel inflation pains.
There are cracks of the consumer. Yes, the consumer remains strong overall, but there are pockets of weakness. We do expect consumer spending to start to slow.
Dollar Tree, the latest victim of profit pressures and theft. That conversation up next. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come. I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
I do ask myself if, the story of resilience in the U.S. economy is really dependent on the continued resilience and health of the consumer. We are seeing signs that consumers are coming under pressure. You're beginning to see the consumer bend more so than break, but obviously that does suggest tougher times ahead for the overall U.S. economy.
As I keep saying, I am on a budget. That was JP Morgan's David Lebovitz on the state of the consumer. Retail earnings definitely taking a hit. The latest victim is Dollar Tree, missing analyst estimates. The CFO quote writing, factors like sales mix and elevated shrink continue to pressure margins. Meanwhile, Nordstrom's and Gap reporting earnings after the closing bell. Simone Foxman is back with us. I thought Dollar Tree was kind of where you go when things are bad, which was confusing. Simone, what did you make the numbers so far?
Yeah, and to that point, the CEO saying that 5 million new consumers, with 2.6 million of those customers having a household income over $125,000. So that suggests that there is some trade down, some move to Dollar Tree, but it's not offsetting the decline in profit margins. And that's really the concern here. Dollar Tree talking about how how consumers are increasingly buying their consumables, their food products from them, but those are low margin products. And then, of course, you have this mention of shrink. We heard it from Dick's this quarter. We thought that was the one everyone was really going to focus on, but now we're also hearing it from Dollar Tree.
Yeah, Simone, thanks a lot. Appreciate it. So all eyes are going to be on Chair Powell speaking in Jackson Hole on Friday. Clear Harbor's Aaron Kennan writing, quote, the Fed is poised to pause in September and continue to assess the balance of disinflationary pressures, employment, and stronger than anticipated growth. This will be the message out of the Fed in Jackson Hole. Aaron is still with us. All right, Aaron, help me tie in the PMIs over the last 2 days, the numbers from retailers, into how that's going to feed through to what Jay Powell says tomorrow.
Yeah, I think you're seeing the average consumer feeling a bit of a incremental tightening when you look at their own personal balance sheet. You look at the savings rate, excess cash, it's trending significantly lower. It hasn't been where it is for quite some time now, well, into, sort of the possibility of a recessionary period. You look at, sort of the revolving lines of credit on their credit cards, they've been extended. You look at auto delinquencies are up. And jobless claims, well, this morning were sort of roughly as expected, but, have been elevated recently. And I think, the big question for, the market is when will employment really crack so that the consumer really feels the pinch. And we know monetary policy, Alex, works with a lag. If you look at the mortgage market, for example, 61% of mortgages have an interest rate of 4% or less, and 81% have a rate of 5% or less. And the average mortgage, if you were to buy a home today, is about 7.5% on a 30-year fixed rate. So if the rate structure remains the same, even with unemployment where it is today, there's going to be, further tightening on the consumer side.
Aaron, taking into account the PMIs, the services in particular from yesterday, clearly the gap between manufacturing and services is starting to close, but services really haven't gone into contraction territory yet. Do you think that that's bleeding through into the job market yet?
Well, you're right. I mean, we saw 43.7 on the manufacturing side, and just barely expansionary now on the services side. Europe, a different story, full contraction. But back in the U.S., I mean, certainly we're keeping a significant eye on the employment picture, and I'm sure the Fed is as well. But the Fed has done a lot of tightening, Alex, and it's not just in raising Fed funds, and it's not just in what we see in the rate structure of the United States. Quantitative tightening, reducing their balance sheet, we think is adding probably a good 150 basis points when you actually think about the true Fed funds rate. So it's probably closer to like 7% here. And they've gone a long way. Headline inflation went from 9% back in June of 2022 to 3.2% today, and core is down 200 basis points over the same period. So, wait and see, monitor data seems to be the most prudent approach for the Fed here going into Jackson Hole.
Real quick, Aaron, what's your favorite hedge right now as we head into all this uncertainty?
Well, I think on the equity side, if you think that we're going to see a slowdown and that disinflationary trends will continue, utilities do look interesting because they're so rate sensitive. But I think the traditional sort of longer duration part of the Treasury market, I don't mean the 30-year, but closer to the 10-year, it does make some sense here. If growth really does disappoint to the downside, Treasury should rally. It'll give Fed relief, and maybe we even see them cutting next year. And so I think that certainly, when you think about sort of an equity fixed income balance, I think that sort of hedging component of high grade interest rate product makes sense here.
Aaron, thanks a lot. We really appreciate your insight. Thank you, Aaron Kennan, joining us there. All right, coming up, we got the market moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
Adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
This is Bloomberg.
This is Bloomberg's The Open. I'm Alex Steele, in for Jonathan Farrow. The Nasdaq 100 losing a little bit of steam here, giving up some earlier gains. It's time now for the trading diary, what you need to be watching through the rest of the week. You got Nordstrom and Gap earnings coming out after the closing bell. It's been a bit mixed bag for retail earnings. Plus, Chair Jay Powell will be speaking from Jackson Hole on Friday. It's the main event at 10 a.m. Eastern. All right, let's go to next week. We get the JOLTS data on Tuesday. We also get U.S. core PCE and GDP coming on Wednesday, a heavy lift day. And finally, rounding out the week with U.S. payrolls report next Friday with like the 3 people in the world who will be trading on that day, on Labor Day weekend. This is the countdown to the Open. Thanks for joining me. Jonathan Farrow is returning tomorrow for a special edition of Surveillance from Jackson Hole. That starts at 8 a.m. Eastern time, so don't miss that. In the markets, you're looking at S&P really trying to hold on to some gains. The Nasdaq kind of giving up a lot of its oomph, and as we head into the trading day, you have safeties, real estate, utilities, the top sectors within the S&P. You got energy and consumer discretionary on the downside. A little bit of a push and pull. This is Bloomberg.
life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
Moment news breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We get some lights in here. We'll be all fired up. We are coming here live from the Bloomberg Interactive Broker Studio. We're doing that YouTube thing as well for the interweb.
That's right. Go to see Paul Sweeney and myself, go to youtube.com and search Bloomberg Radio, and you can see us live streaming. And you can see the accident that happened to me last night.
Accident that happened to you last night?
Yes. I normally trim my beard with a number 6.
Oh, that's right. We don't have a beard.
And I didn't look, and it was like late. Maybe I'd taken a Xanax or something, and I just went, and all of a sudden I had this naked patch, like, there was nothing I could do to save myself, so I just shaved the rest of it off.
I didn't even notice, but thanks for sharing that with us. That's important stuff here. So, Matt, going sans beard today. How long is it going to take you to grow it back?
That's probably going to be a solid month before it gets back to a real beard, you know?
I vote we just go without it, but that's just me. All right, Michael McKee, he's out in Jackson Hole. He's going to join us, give us the latest from what's happening out there with all the economists and the central bankers there. Wendy Schiller of Brown University is going to join us to break down the GOP debate, and we'll be joined by Mike Mulroy, co-founder of the Lobo Institute, talks about the war. I have Mick Mulroy.
Mick Mulroy, that's right.
Yes. Yeah, that's right. So anyway, all right, let's get things rolling here. John Tucker, Bloomberg Business Flash.
All right, S&P 500 advancing for a second day. The NASDAQ 100 outperforming. But you know what? The market's not getting the lift many had anticipated from the most active of the shares today right now, NVIDIA. It is hitting a record, pairing some of the earlier gains, though, after they delivered that bang-up earnings report. Dan Ives at Wedbush Securities was on the program earlier, weighing in on the earnings results from NVIDIA.
This is unparalleled demand that we have not seen since the internet in 1995. In my opinion, it speaks to what I believe is now the start of a new tech bull market.
Yeah, right now the S&P 500, 18 points higher. That's up 0.4%, 44.54 in the index. The Dow's up 184 points. The NASDAQ 100, 21 points higher. That's up about 0.2%. Among the economic data, applications for unemployment benefits falling to the lowest level in 3 weeks. No recession there. The 2-year yield right now 3 basis points higher, right around 5%, 4.99 to be precise. Next in focus, of course, the gathering of the top central bankers at Jackson Hole, Wyoming. I'm John Tucker. I guess barber school would not be in your future.
It was an accident. As I say, I was a little bit foggy at the time. And yeah,
all right.
It just...
No explanation needed.
You got to check anytime you're trimming your beard. You got to check on the length of the razor.
Sharp objects. Yeah. Matt Miller. I'll tell you one who's still sporting a pretty sporty beard, and that's Bailey Lipschultz. He joins us here in our Bloomberg Interactive Brokers studio. Bailey, we'll look at a
healthy beard.
Bailey. That is a solid
I
effort.
will say I don't trim my beard for that exact reason. It happened to me a few years ago, and I'm just burned.
So now you have a beard guy that you go to?
Got a beard guy in Hoboken. It cost me an extra $34 a month, but keeps me tight.
Yeah. And, you know, no rookie mistakes here, obviously.
Well, the biggest issue is when you're growing it back, it looks kind of ugly. It's not really a good length, at least for me. And
so let's just agree right here he's going to go without a beard going forward.
Me?
No, him.
Oh, Matt? Yeah.
All right, we'll do that.
I don't think so.
Done. No. What do you got for us, Bailey?
As JT mentioned, all eyes were on NVIDIA. Right now up 3.7%. Not a massive gain. Was up closer to 6.5% this morning, but still $37 billion in market value being added. Semiconductor index, though, flat on the day. When you're looking at some of those outperformers and underperformers, though, in the S&P 500, worst performing stock this morning, Dollar Tree, down 10%. Weak 3Q profit view, soft margins, disappointing. On the upside, though, Autodesk, ticker ADSK, rallying right now 3.5% after positive results in a forecast. So while all eyes were on NVIDIA, guys, we did have results from Dollar Tree, Autodesk. We have an update from Boeing and Spirit Air. Boeing down 2.4%.
Oh, the Boeing.
A lot of
Dude,
news.
They said that one of their third-party suppliers drilled incorrectly holes in equipment that's supposed to keep or regulate cabin pressure.
That could be a problem.
That could be no bueno at all.
That
right?
caught me so far off guard. They mentioned that on our call this morning, and I was like, double take, one more time. They drilled holes that are regulating oxygen in a metal box that sits really
I mean,
high
I
in the
think
sky.
they were supposed to drill holes in that equipment. It's not like they weren't supposed to drill any holes there. The problem is they drilled the holes incorrectly. In any case, you definitely want cabin pressure to stay cool when you're 35,000 feet. I mean, John Tucker, can you chime in here? Isn't it cabin pressure like very important on a commercial airliner?
Yeah, having flown Cessna 150s, I probably never climbed that high, I'm going to say, man. So,
but you understand the physics of it because you watch YouTube videos.
Yeah. Pressure's important in the cabin at 30,000 feet.
I don't know why we always have to. Now we're going to have to deal with 737s
By the way,
and
that is actually a
A320s.
very important topic because you get very fatigued from the cabin pressure that they set in the fuselage when you're flying that high. So they've nowadays been able to adjust it to a level where you're less fatigued if you're flying in the new aircraft. So that is a very, very important point.
Yeah, I don't want to be fatigued.
Well, the 737 MAX, it's like the most tested plane in the world.
But I don't want to be in these things. I like the
come
747.
Yeah,
you
well,
know?
those
I
days
like
are
the
gone.
787.
I like those too.
You know, I like the Airbus A380. I like these big wide bodies.
But when you go to Newark to Columbus, Ohio, you're not getting that.
True.
You're getting a little, putt-putt Embraer. So, Bailey, the Dollar Tree news, that's one that surprised me because I thought they might have done well with people trading down. But that shows you that people. I mean, it's tough out there for a lot of folks out there if the Dollar Tree sees weakening sales.
Exactly. And when you look at some of the things they called out, though, they did call out margins being hurt not only by an unfavorable sales mix, but elevated shrink and investments in wage. So they're paying people more to work there. They're having more theft, which is what shrink stands for. And then when you're looking at some of the other expenses, it's not a great outlook actually for a company. And when you look at the way Dollar Tree's been trading, again, down 10% this morning, ticker DLTR, that's trading basically at the lowest level in quite some time, whereas we've seen it from a number of other retailers, some good, some bad, but Dollar Tree's second negative report in a row, and showing that, as you mentioned, maybe people aren't trading down as much as many might have hoped for.
Yeah, it's interesting. It's just tough out there across the board, and for some of the folks, the parts of the demos that do shop at Dollar Tree, the Dollar Shores, are really feeling it. We didn't see it so much with the Walmarts or the Targets, but we're seeing it here.
Another company I'm keeping an eye on as I write about all things speculative, VinFast.
Yes.
We talked about this before. Now up another 40%. Market cap $120 billion. This is a company that is expected to have, I believe, their delivered autos, I want to say off the top of my head, for the year are expected to be essentially what GM does in a week. So in terms of value there.
Where does this thing trade?
This is NASDAQ.
Vietnam.
NASDAQ stock?
NASDAQ stock.
Wow.
NASDAQ D-SPAC. So big note, less than 1% of shares available for trading. So this is one of those just really gambling vehicles. But when you look at the numbers, the paper profits, the paper value, even $120 billion is...
So is this a meme stock? Is this just getting manipulated by the marketplace?
I wouldn't call it a meme stock. Typically, when we look at meme stocks, they're heavily shorted. They're very speculative. There at least is a reason to kind of rail against short sellers, whereas this is just, I think, more of a product of you've got essentially 1 million shares available for trading, and you've got 9-10 million shares trading a day, so you just have massive swings. Even Jim Chanos basically called it an insane stock, but I've talked to people who were looking to short it.
Even Jim Chanos?
Even Jim Chanos.
Dude, I mean, he's a short seller.
I know.
Yeah.
I just meant like him calling it out, coming out and calling it insane kind of caught the eye of a couple people. And I know when I was talking to other shorts, they're basically saying they can't get a borrow. It's 300-400%. So if there are shares available, it's pretty much impossible to get it bet against a company that, at least for right now, seemingly is only going up.
What's the name of the guy who started this company and who's now been made a mega billionaire?
Tam Chai Wai.
I can't pronounce it, but he's the richest man in Vietnam.
I'm just looking for him on the rich list. I don't know if we've got him quite yet in Rich Go, because I'm looking through, and I mean he should be worth now at least $40 billion, right?
He would be worth more. I mean, he owns 99% of the company, and if you ascribe, I don't know how quickly our Rich Go updates, but if you ascribe 99% of 120 billion, he's
He's doing quite well.
Yeah,
very good. Good for him.
He could buy his own 747.
Exactly. So, all right, we got that. Anything else out there, Bailey?
Bath and Body Works under pressure again. This is a company that had mixed results yesterday, down 4.2%. So that, alongside Dollar Tree, 2-year worst performers in the S&P 500. Again, a lot of that excitement around AI, a lot of the excitement around chip makers, not showing out today. AMD also down 3.6%. So the stocks that were leading us higher over the last few days, for the most part, other than NVIDIA giving back some of those gains.
All right, Bailey, thanks so much. We appreciate it. Bailey Lipschultz, he covers all the markets for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. All right, I think if you're going to give an award to an economist, the best-looking economist in a cowboy hat, you got to put Michael McKee in the mix, I think.
I mean, I was advised by Bloomberg management this morning that we're not really to talk about it or make any jokes about it. But
I was not advised. So
I would say he is probably the best-looking person we've ever had on Bloomberg television now.
Really?
I just love the look.
All right, so for those that are not on YouTube, we're going to chat with Michael McKee right here. He's out in Jackson Hole for the big confab of central bankers and economists. And Michael McKee is out there along with our team from Surveillance. And he's sporting the cowboy hat because he's in Wyoming, and that's the Cowboys, the University of Wyoming Cowboys. So he's mixing in very well right there. Michael, you've been out there for 24 hours or so. What are people kind of chatting about on the sidelines?
It's pretty calm this year. There's no real crises that anybody is facing. It's been the same sort of problem for the last 2 years of inflation being high, unemployment being low, and a lot of concerns about what might happen in the world that hasn't happened yet. So nobody really too worried. The theme of this conference is structural changes in the economy. Going forward, are we going to go back to the 1990s era of higher inflation and higher interest rates, but the economy boomed during those years? Do we go back to the pre-pandemic level of low interest rates and low inflation? all the things that have happened with supply chains, reshoring, energy prices, all those things, and how they're going to affect policy going forward. And I think there's a lot of interest in that among the people here because they don't think there's much more to say about the current policy regime in the U.S. or any of the other countries.
I thought it was interesting. This morning you interviewed Jim Bullard, former St. Louis Fed president. Now he's at Purdue University running their business school, right? Or I guess the dean of their business school. He said that the long and variable lags of like the Milton Friedman days were a lot longer and now shorter. I thought it was the other way around. I thought that because now, post great financial crisis, everybody except Paul Sweeney has a fixed rate 30-year mortgage, that it would take even longer for monetary policy to have an effect in this economy.
Well, that's kind of the conundrum that they're seeing in terms of real estate, because normally real estate would be one of the most sensitive sectors to higher rates. But the question is, what about the rest of the economy, business borrowing, consumer borrowing for non-housing? And there is a feeling that because markets adjust so quickly, they started pricing in rate increases before the Fed started raising rates. And the fact that data are available to everyone so soon, basically immediately, that the lags do shorten because rates go up faster when the Fed is raising rates than they did in the past. So that's the debate, though, how long those lags are. And you have the longer lag people say, well, look, right now we've got these ISMs coming in badly and things seem to be slowing down some. And then you got the other side saying, yeah, but look at the Atlanta Fed GDP now, we're growing fast. So that's a debate that they will be having at the Fed and the other central banks as we get closer to the next round of rate moves.
Michael, it is a global conference out there. I wonder kind of what the feeling is about our good friends in the UK and Europe. Inflation seems to be more of a thing there. Economic weakness and recession seem to be more of a thing over there in Europe. What's the feeling in Jackson Hole about our good friends in Europe?
Well, we're going to be hearing from the Europeans and the English. We're going to hear from Christine Lagarde, of course, here on Bloomberg, and also she is speaking at the conference. And the question for them is, how much further do they need to go? They're at 3.75. Of course, we're at 5.5. But remember, they started at negative 50. So they have raised rates quite a bit and tightened policy quite a bit. And they do have the issue of a lot of different countries with a lot of different economic situations. Germany, of course, the largest economy in the EU, is not doing well at all. And so do they raise rates more to try to break the back of inflation? Or is inflation really coming down? We've seen some big moves there. The British have a completely different set of problems, same issue with high inflation, but they've got supply chain issues that are still in train, and they've got questions about Brexit and its effect on the economy. We will hear from the Deputy Governor of the Bank of England, Ben Broadbent, and so that will gather some interest. And you didn't mention Japan, but the interesting thing is Kazuo Ueda, the new Bank of Japan governor, is making his sort of international debut here, and he is going to be speaking as well. And their job is to keep inflation up. They finally got it above 2%, and so what are they going to do to keep inflation higher when everybody else is trying to push it down?
My kid brother's out there and sent me a picture from the Mangy Moose last night. He wanted to know where he can run into the venerable Tom Keene. I know that Tom, John, and Lisa are out there on assignment today. They have a reporting day. Where do people hang out in Jackson Hole? Where is, if you wanted to run into Ben Broadbent or Christine Lagarde, what restaurant or bar would you be likely to find them in?
Yeah.
I'm looking at Mike McKee and
it looks like his line dropped.
Looks like
he was ready to
can't hear
opine there, but yeah, it looks like he's had some technical difficulties out there.
I think
so. Your brother why was your brother out there? He's not a renowned economist.
No, he's not. He's an insurance salesman and a private wealth manager, but he is hanging out in Jackson Hole for some other event, and I guess I've been to Jackson Hole a few times just to ski, right? And for when I was there, it was the Mangy Moose or the $1 Million Cowboy Bar.
Right, yeah.
But those are like, pretty touristy places, and I'm sure Tom will belly up to the bar, one of those, to do a ski shot or something, but he's going to probably go to someplace more sophisticated,
Sure, and
I would imagine, to talk to
absolutely.
the big level economists.
Tom is an A player. All right, that was Michael McKee out there in Jackson Hole. We'll get back to him later. He'll have reporting there all throughout the day. Right now, let's get a Bloomberg Business Flash with Mr. John Tucker.
All right, we were looking for that lift. Well, the NASDAQ 100, that has now turned lower, despite the fact that NVIDIA shares were at a record after its earnings report. Now, while NVIDIA is the best single performer in the index, you have a decline in shares of Apple and Tesla, as well as Advanced Micro Devices. That is apparently ruling the day. Right now, the NASDAQ 100, it is lower by 71 points. That's a decline of 0.5%. The S&P 500 unchanged right now at 44.35. The Dow Jones Industrial Average is 44 points higher. That is up 0.1%. Another reminder, the reacceleration in the economy could put upward pressure on inflation. Applications for U.S. unemployment benefits falling to the lowest level in 3 weeks. So that's just suggesting demand for workers still healthy at this point. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio. We're also streaming on YouTube, so head over to youtube.com and search Bloomberg Radio. Right now, we're going to get a little political with you. We had that debate last night. So what we're going to do here is we're going to talk to some smart people. Wendy Schiller, professor at Brown University, is joining us here. And then at 10:30, we're going to have that simulcast with Bloomberg Television. Joe Matthew and Anne Marie Horton interview GOP presidential candidate Nikki Haley. So we're going to go a little politics for the next 20 minutes or so. Wendy, thanks so much for joining us here. We had a debate last night, sans President Trump. What were your takeaways from the Republican candidates?
Well, I mean, I think some of them, did themselves some favors. I think Ron DeSantis held his own. Maybe he didn't strike a knockout blow against anybody else, but I think he showed he was still formidable and wanted to fight. I think Mike Pence, even though he's got a tough climb, really held his own and sort of emphasized his experience. Nikki Haley, whom you're going to speak with, I think she had a banner night. She did not shy away from debate. She tried to be more transparent, I think, about some issues like abortion. And she really, I think, wiped the floor with Vivek Ramaswamy because she indicated that she was, of course, representative of the UN under Trump, that she knew how to navigate international and foreign policy, and that he had a very simplistic response to engaging with the world. And it just really showcased his inexperience, and it really highlighted her experience. So I thought that was one of her stellar moments throughout the whole debate.
What was her statement on abortion? Because I know voters have been coming out, as evidenced by the recent referendum, I guess it was, in Ohio, when it comes to abortion. And the GOP has typically been more anti-abortion or pro-life, whereas it seems like the majority of the country believes that at least in the early stages, a woman should be able to decide herself what she wants to do with her body.
Yeah, I mean, this was really a showcase for people who were trying to get the GOP to a place that the majority of Americans might agree with, like a 15-week abortion ban. I'm not saying that would, necessarily attract a majority position, but Mike Pence had it out there. And I think that seems, quote unquote, reasonable to a lot of people, particularly independent voters. So that's a position that would not lose the White House. An outright ban or a 6-week ban, I think, given that Roe v. Wade has been basically revoked by the Supreme Court, I think that's a losing position for the GOP to get the White House in 2024, and Nikki Haley understands that.
Hey, Wendy, talk about Ron DeSantis. One point was polling fairly well, but has really kind of fallen off dramatically. Talk to us about his candidacy to date, and particularly about last night.
Well, I think it shows you the difference between running on a national stage and running in Florida, a big state, running really well, winning a big campaign, getting a lot of national attention. And I think the mismatch was in how to run a campaign on the ground in this GOP against Donald Trump. He never came out really hard against Donald Trump. He still won't. In fact, it was hard to get an answer from him about whether Mike Pence did the right thing in ratifying the 2020 election last night on the debate stage. So I think that was a mistake on his part. I mean, I think Trump voters want someone who will fight for them. That is constant refrain in the polling that we see, and that's what people want to see. So DeSantis showed up last night as a fighter, but the issue is he more of a fighter than Donald Trump? And if he's not willing to fight Donald Trump, how does he actually illustrate that to the voters?
In the general, I mean, you know, everybody who hasn't followed his career closely is just going to know DeSantis for don't say gay and, you know, trying to fight Mickey Mouse. Is that really going to help him?
Well, I think amongst the core, really conservative and highly religious wing of the primary electorate in the Republican Party, which you also saw Senator Tim Scott from South Carolina trying to appeal to a number of times last night on the debate stage, that will appeal to them. And we've seen the rise of a lot of sort of anti-gay legislation rhetoric in state legislatures. So in the core red states, that might help DeSantis in the primary process. But in some of the bluer or mixed purple states, you know, Michigan, Ohio, bigger states in the Republican primary, I'm not sure how that plays, and I just don't know how far that gets him. And I think his challenge is to really show that his poll numbers can move up in the next couple of weeks, that they can move at all. If he can show that by September 27th, the next debate, then I think he becomes still the story of being the number 2 behind Trump.
Did Mike Pence, you know, I had to get up very early this morning, so I went to bed before the debate. But I heard there was a question of whether or not each candidate would support Donald Trump if he wins the nomination. Did Mike Pence raise his hand there? Because you would think he would still harbor a little resentment from the time that Trump tried to have him lynched.
So Mike Pence, I thought, as I said, I thought he held his own and better than held his own last night. He was very feisty for Mike Pence from what we've seen before. But he sort of hedged on it. But what he didn't hedge on was if Trump was convicted. That was the weird thing. Like, well, you know, the question was if Trump is convicted, not indicted, but in convicted, would you still support him? And most of the nominees, except for Asa Hutchinson, raised their hand. And Christie sort of waved his hand and then said, oh, no. And then Mike Pence kind of raised his hand a little bit. But it was not a profile in courage for any of the people on that stage. And as one of them said to another, if you support the rule of law, you know, how can you possibly discount this kind of conviction? So This is going to be a problem for the Republicans moving forward. I didn't see anything last night from most of those candidates that would tell me independent voters would choose them over Biden yet. But I saw some inkling that some of them could peel away that group from Biden.
All right, Wendy, thank you so much for joining us. Wendy Schiller, professor at Brown University. Right now, I want to bring in Mick Mulroy. He's the co-founder of the Lobo Institute, and he's got a lot of experience within the U.S. government, former U.S. Marine infantry officer, former military operations officer at CIA. Hey, Mick, part of the debate last night was talking about Ukraine. I'd love to get your thoughts to where the Republican Party is in its support of Ukraine. Did you learn anything at the debate last night, one way or the other?
So unfortunately, I was on the news talking about Prigozhin's possible demise last night.
Yeah, we want to get your thoughts on that as well.
Yeah, sure. But when it comes to Ukraine, and I do stay out of politics altogether, but not on the issue of national security when it comes to Ukraine. I think it's important that this current administration does a better job explaining the why we're doing it, not just the what. It doesn't do much good just to talk about the billions of dollars that are going there. I'm not opposed to that at all. But it's more important to talk about why. And I think there's plenty of Republican candidates that do understand the why, and they are explaining it. We have a strong partnership with Ukraine. They have been invaded unlawfully by one of our most significant adversaries, who, if left unchecked, could easily continue on into a NATO country, which would put us at war. So I actually just got out of the Churchill War Room here in London about an hour before this. And if that tells you, if you look at that history and how the United States supported England during that time, I view this very much the same. And I hope that everybody that would ever seek to be the commander-in-chief would as well. Partners deserve to have partners in times of peace and in times of war.
Well, only for so long, right? I mean, President Biden showed that no matter what kind of promises we made to the Afghani people, we pulled out of there without saving them. Do you think that's going to be a problem for him in the election?
The Afghan withdrawal, I absolutely do think that's going to be a problem particularly not that we're a big voting bloc with the Afghan veterans. That, my position, although it doesn't matter much, was that we should have left a residual force to maintain what we fought for 20 years. But we certainly shouldn't have not just abruptly pulled out and left all of our partners, those that fought alongside us for 20 years, to the whim of the Taliban. I think that was a national embarrassment, and I think most Americans, regardless of the party they're in, agree with that. And I do agree with the premise of your question. I think that's going to cause some problems, at least as much as foreign policy does play into a president election. That is a blight, I think, on this administration.
Let's get to what happened in Russia yesterday. Reportedly, Yevgeny Prigozhin was on a private plane that crashed outside of Moscow. And as most commentators have said, if that's true, it's not a huge surprise because his days were numbered after leading some kind of mutiny against Moscow. What's your take on that? How does that change the picture for Wagner, for Ukraine, and for Russia?
So if Prigozhin, and apparently Utkin, and Utkin was actually the person who started Wagner. His call sign when he was in Russian Special Forces was Wagner. He was apparently on the plane as well. If he was on that plane, it looks like the Kremlin may have been trying to figure out how do they deal with Wagner post-Prigozhin. And apparently, if this is true, they figured it out. And that's why this event occurred. They need to figure out how to continue operations that they find economically viable in Africa, for example, without him.
Right.
And maybe they did that. And that is likely it's just an analysis. I don't have any information specifically on that, but why this took so long to happen.
All right.
And I think from all the analysis I've seen, it was definitely something that struck the plane that brought it down.
All right, Mick, thanks so much. We have to run just because of time. Mick Mulroy, co-founder of the Lobo Institute. Now we're going to head right to the nation's capital. Our Joe Matthew and Anne-Marie Horton interview Republican presidential candidate Nikki Haley last night at GOP's primaries debate. Let's head to that conversation right now.
Welcome to Bloomberg Television. I'm Anne-Marie Horton alongside Joe Matthew, and we are pleased to have joining us now the former South Carolina governor and UN ambassador Nikki Haley. Ambassador, thank you so much for your time this morning. The Wall Street Journal editorial board is leading with this. Most GOP voters who aren't in Iowa or New Hampshire are only getting to know these candidates, and Ms. Haley may have been the most pleasant surprise. How are you feeling this morning? What have your overnight fundraising numbers looked like?
Well, there's more where that came from, so the Wall Street Journal needs to get ready. But, it's great when you can be on a debate stage and allow everybody to see their options for who's going to lead the country going forward. I think it's a good time. This is the start of the debate season. We think we did really well. We're seeing that. We're getting support. It hasn't stopped since the debate was over last night all the way into this morning, and we welcome it. I hope your viewers will go to NikkiHaley.com. But I think what's really important is we have to focus on the issues at hand. How do we get inflation down? Too many families can't afford groceries. They can't afford their rent. They can't afford gas. They can't afford child care. 50% of American families can't pay for diapers, and 1 in 6 American families can't pay their utility bill. And while everybody would love to say, oh, Biden did that to us, we have to remember our Republicans did that to us as well. And that's why I called out Tim Scott and Ron DeSantis and Mike Pence and Donald Trump for the spending like drunken sailors and raising the debt limit. I think it's time that we start to really make sure we get our fiscal sanity in order.
Yeah, that was a big moment for you last night, calling out not only Democrats, but members of your own party on that debate stage and here in Washington, Ambassador. As you pointed out specifically, the Trump administration added $8 trillion to our debt. So let's be specific today on Bloomberg. The third rail that nobody wants to touch is the entitlement, Social Security, Medicare. How would you manage the entitlements to try to start getting our arms around soaring debt?
Well, you've got multiple candidates on that stage that said they wouldn't touch entitlements, including Trump. And any candidate that says they're not going to touch entitlements means that they're basically going to go into office and then leave America bankrupt. Social Security is going to go bankrupt in 10 years. Medicare is going to go bankrupt in 8. So the way we deal with it is we don't touch anyone's retirement or anyone who's been promised in, but we go to people like my kids in their 20s when they're coming into the system and we say the rules have changed. We change retirement age to reflect life expectancy. Instead of cost of living increases, we do it based on inflation. We limit the benefits on the wealthy, and we expand Medicare Advantage plans.
What's the right age there then, Ambassador?
Well, I think we have to do the numbers. We've got to figure out what it is. But what we do know is 65 is way too low, and we need to increase that. We need to do it according to life expectancy.
You raised your hand last night when asked if you would support the Republican nominee. Of course, if that ended up being someone else, I know you're running for president here. But if Donald Trump is responsible for adding $8 trillion to the national debt, how could you support him again for another administration?
Well, first of all, I don't think Donald Trump's going to win the nomination. I think I'm going to win the nomination. And secondly, I think that we have to focus on the fact that anybody is better than a President Kamala Harris. I mean, you look at the socialism creep that Biden and Harris have gotten us into, whether it's the CHIPS Act, whether it's the Inflation Reduction Act, whether you see all of these subsidies, that there's green subsidies that they're doing. They're the ones that have left us into a situation where I don't think our kids are going to forgive us for it. And so any person on that stage is better than Kamala Harris, and I'm going to say that all day long, but I think the American people are smart. I don't think Donald Trump's going to be the winner of the primary. I think I'm going to be the winner of the primary, and I think that's why we need a new generational conservative leader, because we've got to leave the past and the negativity behind us, and we've got to start focusing on the real problems at hand and start getting things done.
When we look at the new generation, the most Googled individual today, Ambassador, is Vivek Ramaswamy. You took issue with foreign policy yesterday. This is an individual, #1 Googled in America, who wants to give Ukrainian land back to Russia, something that actually individuals in the Republican base agree with, kind of taking a playbook from the former president, who has called what Putin has done in Ukraine genius and savvy. You chastised Mr. Ramaswamy yesterday, but you worked for the former president. Are both these men wrong when it comes to Russia's invasion of Ukraine?
Well, you know, President Trump used to have it right when it came to Russia and Ukraine. He reversed the Obama strategy, and he sent Javelin missiles to Ukraine, and I was proud to serve with him then. He's now backtracked now and is going into where he's weak in the knees on Russia again. You've got Vivek Ramaswamy, who basically wants to side with a murderer over a pro-America, freedom-loving country. That doesn't make sense. You've got Ramaswamy who wants to cut aid to Israel. He doesn't understand that it's not that America needs Israel. It's not that Israel needs America. America needs Israel. They're the front line of defense for Iran. He wants to feed Taiwan to China. He's missing all the points of you can't be so narcissistic to think America doesn't need allies. We do need allies. And when you have an ally, you take care of them. Everybody's talking about this funding to Ukraine. First of all, I think economic aid should come from the Europeans, but equipment, military, ammunition, we should be sending that. And when we send it, let's keep in mind, it is less than 3.5% of our defense budget that has gone to Ukraine. If you look at the percentage of GDP, 11 European countries have paid more than the U.S. But making sure, we have to always know a win for Russia is a win for China, and we can't let that happen.
You're saying Trump did get it right at one point, but it was under the Trump administration that withheld millions of dollars, hundreds of millions, to Ukraine that was appropriated by Congress. Did they not prepare Kyiv well enough for this onslaught?
Well, I think that, look, there was a problem with the fact that I think Trump had 2 sets of ammunitions that were supposed to go to military equipment and ammunitions that were supposed to go to Ukraine before Russia invaded, and Biden pulled it because he didn't want to upset Putin. This war could have been prevented. Biden was slow to the take. He didn't act strong enough, and that's what happened. And then you go and you add the Afghanistan debacle. I mean, the idea that we left Bagram Air Force Base in the middle of the night without telling our allies who stood shoulder to shoulder with us for decades because we asked them to be there. It was the green light Putin needed. It was the excitement that President Xi in China got. It's why Iran started building a bomb, and North Korea started testing ballistic missiles. When they see weakness, that's when they smell blood in the water, and that's why we saw aggression. We need a strong American president who understands what it takes to keep Americans safe. And the way you do that is you make sure you defeat Russia when it comes to Ukraine, because that sends the biggest sign to China on not to invade Taiwan.
The Biden administration at the moment is sending billions of dollars to Ukraine. They've also, under their leadership, were able to help expand NATO. Do you not agree with that?
I absolutely agree with defending Ukraine, and I agree with the fact that we need to expand NATO. I mean, that's good to see, and I actually think that it should go further than that. I think that an invitation to NATO should go to Ukraine. They've proven that they're good military fighters, and let's keep in mind, Russia has never invaded a non-NATO country. They've invaded Georgia, they've invaded Ukraine, they've invaded Moldova. They don't ever invade a non-NATO country, so we need to make sure that we continue to expand NATO. And we also need to work with our other allies, India, Australia, Japan, South Korea, Israel. We need to start going to the Arab countries. We need more friends, not less.
I have to ask you about an important issue on the campaign trail, Ambassador, that loomed large over the midterm elections and will certainly be top of mind for voters, Democrats and Republicans, in this next election cycle, and that is abortion. It came up in the debate last night. You've suggested that there are no votes for a national abortion ban or, for that matter, a regulatory bill here in Washington. You made that point last night. But I know that your state of South Carolina has put in place a 6-week minimum. Mike Pence and some others in the Republican Party are suggesting a national 15-week. What is your minimum? What should be, in fact, the number of weeks for this country to coalesce around?
I am unapologetically pro-life, not because the Republican Party tells me to be, but because my husband was adopted and I had trouble having both of my children. So I'm surrounded by blessings. Having said that, I don't judge anyone for being pro-choice any more than I want them to judge me for being pro-life. We didn't need unelected justices deciding something this personal and this important. So I think it was right to send it back to the people to decide. If the people of South Carolina chose